This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Let's do it again at 8:30. That's what we'll do today. We had the Consumer Price Index out yesterday. Bombshell. We'll get to those yields in a moment. Paul Sweeney, PPI, it's just like my ute. You know, it's just like back then, business, manufacturing, three kinds of inflation matter.
Yeah, absolutely. The prices that the factories are paying and that kind of stuff, producer price index, we have to get a good feel on that. We got the hotter than expected number yesterday on the consumer side, Tom, and that was reflected immediately in the markets, most notably in the bond market.
ECB as well today,
Yes.
and the number one picture, I get Kit Chooks to join us later on, and we've got a wonderful guest coming up in moments here on ECB. It's really a different story. The economy there, for any set of reasons, flat on its back.
Flat on its back, although, you know, inflation has retreated. I think most economies there, inflation is within sight of the 2% target that the ECB would like to see here. But I think the expectation is, and we'll see later on, that ECB will kind of hold its ground right now.
Lisa's going to give us a full data check here, but Paul, we got to walk through the bond space, as they say. I'm going to go to the real yield, which reaches out ever higher today. 2.13% is remarkable. I got to get a chart out, but we're getting up near, well, we haven't been that high in a long time.
Yeah, exactly.
And the inflation is just, did you see the 2-year yesterday afternoon?
Yeah, exactly.
I woke up from the surveillance nap. I was like, oh, what's that going to do to the 30-year? 30-year mortgage popped up yesterday. I know.
And I guess my refinancing is going to have to wait a little bit. But on the 10-year Treasury, 4.53%, Tom. And remember, our good friend Ira Jersey yesterday saying, hey, be aware of that 4.1%. That's kind of a technical level. If you go above that, 4.7% is the next.
It's a new yield regime after the CPI yesterday. We're on Apple CarPlay and Google Android CarPlay, I should say, as well, the Bloomberg Business app. We're on YouTube. Huge day yesterday on YouTube. Thank you for the vigorous live chat yesterday. It was about the CPI inflation. Sanka decaffeinated coffee came in second place.
Yeah, that's tough.
On the live chat. Search Bloomberg Podcast to get to that on YouTube. Ever growing worldwide every day. Always with the best from the Interactive Broker Studios. Our Bloomberg Business Flash. Here's Lisa Mateo.
Good morning. Yeah, futures pointing to a lower open after yesterday's hot U.S. inflation print. Today, yes, the focus shifts to the producer price index that comes out at 8:30 Wall Street time. We'll also get initial jobless claims for last week. Now, ahead of that, we have NASDAQ, Dow, S&P futures all down about 0.2% right now. Over to commodities, we have spot gold higher at $2,338 an ounce. And as far as oil is concerned, Brent crude $89 a barrel. The 2-year yield at 4.96%. That's down about 1 basis point. The 10-year yield at 4.54%. And that is little changed. Companies making news, U.S. Steel, they're down about 0.5%. Sources say Nippon Steel's $14 billion takeover bid for the company, well, it's received an extended antitrust review. And then you have Amazon, they're down 0.5%. The company has to pay $525 million to software firm Cove for infringing 3 patents that involves cloud storage technology. And Apple, up 0.1%. The retail store in New Jersey's Short Hills Mall, it's petitioned to unionize. Yeah, we've been there many a times. Now marks actually the 5th U.S. Apple store where workers have filed to join a union. That is your Bloomberg Business Flash. Tom and Paul.
What do you think? Union
Short
labor,
Hills?
Short Hills Mall.
Oh, boy.
Explain Short Hills Mall to our global audience.
Short Hills Mall is an A++ quality mall. So, people talk about our malls going away. Some of them are, but not the A quality malls at Short Hills. Packed every single day. I've spent with 4 children so many hours waiting in that little helpline at the Apple
dad
store.
line.
Exactly.
The dad line.
Oh,
how many, what do you call the ear things, earbuds?
The AirPods.
AirPods. How many AirPods has the Sweeney family acquired?
We have single ones lying all over the place because we lose one and then you lose it. Yeah, forget about it.
And now they're going to be union wage.
Well, I was just asking Lisa if she has the new charger for my new AirPods, which have a different I don't know, plug in a thing.
A different plug-in.
Yeah,
So you
it's a
can't
scam.
use my
It's a
charger on
total
his
scam.
AirPods.
Yes. I will see Tim Cook this weekend down at Duke, and I will definitely complain about that.
Go right up there to an important note. In 25 minutes scheduled, the governor of Maryland, Wes Moore, in conversation with John Farrow, Lisa Bramwitz, and Anne Marie Horton, Wes Moore, on this terrible bridge accident in Baltimore. There's an accident in Europe. It is called a difficult economy, a different calculus, a different formula than what we have here. Pooja Kumar joins us now with a brief with TD Bank as well. Pooja, let me just cut to the chase for uninformed Americans like me. Are they going to cut rates today?
Unfortunately, not today. We might have to wait till June, but they are cutting unlike Fed, so that's somewhat better.
I mean, we're going to have to see on the rate cut as well, but describe the European economy. Can I just say as a generalization, it's not as vibrant as the American economy?
That is a good generalization. Also, we are still growing at flat rates, so as compared to a pretty booming economy. What is changing here is that ECB is actually seeing a lot of evidence when it comes to inflation that we are moving in the right direction. The restrictive policy is working very well, especially when it comes to bank lending. The general household is pretty much tightened when it comes to the entire policy. So when we think about this ECB meeting, it's not their forecast meeting. So it's not something that they have to send very strong signals about, but they will give us a soft signal for an upcoming June cut, and yet keep the optionality as to how they want to play around with the pace and frequency. But clearly, we are seeing a strong divergence in how central banks like ECB, BOE will act versus a Fed that has to deal with inflation.
Pooja, what are the data points that the ECB really looks at when it thinks about what to do with interest rates?
Yes, so I think with respect to ECB, they have been very clear that they are looking at wage data. And by the end of May, they should have country-level wage data available. But, we have surveys, we have backdated data, and it all suggests that wages are actually moving in the right direction. So wages have actually fallen about 1% from their peak. Again, service inflation is a bit sticky at 4%. But when you look at the entire picture, Europe does not need such restrictive conditions. So I think when you think about a real neutral of 2% for Europe, we are actually very restricted if policy rates stay at 4% here.
Hey, Pooja, to what extent does the ECB follow the U.S. Federal Reserve? I mean, do they ever want to get out on the edge here and maybe, get ahead of the Fed typically?
So I'm definitely sure this will be a question that Lagarde will be asked during press conference. And when it comes to ECB, they will say that they don't follow Fed. They look at the domestic drivers when it comes to setting policy. But needless to say, it's basically Fed that drives the entire global rates. Especially when it comes to currency, how much impact ECB's rate cuts will be on the economy when Fed is not cutting rates. I think that's something that even ECB is aware of, even if they have to cut rates, that the impact of rate cuts will not be fully felt unless Fed also starts cutting rates.
Pooja, thank you so much. With TD Securities, Pooja Kumar with us this morning here as we go to the ECB meeting. And, of course, the headlines of the Lagarde's press conference scheduled as well. Most important conversation I had in 2023, Paul, was with Paolo Gentiloni, the former Prime Minister of Italy. And I said to him the question I'm not allowed to ask, which is Eurosclerosis gone? Because they're wicked sensitive about this in Europe. It's like the thing you don't talk about, because I'm the ugly American, so I talked about it. But the answer is there was persistent 8, 9, 10, 12% unemployment. Fine. And there was a boom and there was a lessening of unemployment. And it's like, should we have a victory lap?
Yeah.
Should we celebrate? And that's the backdrop to this ECB today, is we don't know if they're onto a new page.
Yep.
Or do they still have some elements of what we called Eurosclerosis years ago?
Yep, exactly right. And I mean, the European Central Bank today, Tom, I'm just kind of looking at some of the latest reporting, is set to keep borrowing costs on hold for a fifth meeting while further readying the ground for cuts to begin in June. And I'll be interested to see what kind of language we get from Lagarde about that June, what kind of body language we get. Because now June may be off the table here in the U.S.
Oh, I think more. Yeah, I think
Yeah.
maybe is not strong enough
Probably
language.
right, yep.
I think yesterday was a titanic shift.
Yep.
We'll go some of that research throughout all of Bloomberg Surveillance today. Where are we? Futures in -15. With our news in New York City, Michael Barr.
Thank you very much, Paul and Tom and Lisa. A setback for Ukraine in its war with Russia. The largest power plant in Kiev's region was destroyed in a Russian missile attack. 6 missiles hit the plant south of the Ukrainian capital this morning. Over the past month, Russia intensified strikes on Ukraine's power infrastructure. The U.S. and Japan unveiled plans to enable seamless integration of military operations as President Joe Biden hosted Prime Minister Fumio Kishida. The visit underscores the Asian nation's importance as a key ally in countering China. At last night's state dinner, President Biden and Kishida spoke briefly. Biden praised the U.S.-Japanese alliance as stronger than it has ever been.
We may be divided by distance, but generations after generation, we've been brought together, the same hopes, the same values, the same commitment to democracy and freedom, and to dignity for all.
The two leaders announced a list of initiatives yesterday aimed at boosting defense and intelligence cooperation with projects ranging from missiles to moon landings. President Biden's administration is issuing a rule designed to close a gap that allows gun buyers to avoid background checks. It targets the so-called online and gun show loophole by expanding the definition of who must obtain a license to engage in firearm sales. Attorney General Merrick Garland spoke in a video provided by the Justice Department today.
If you sell guns predominantly to earn a profit, you must be licensed and you must conduct background checks.
Attorney General Merrick Garland, Michael Bloomberg, founder and majority owner of Bloomberg News Parents, Bloomberg LP, helped found and is currently supporters of Every Town for Gun Safety, which advocates gun safety measures. Round 1 of the Masters begins today at Augusta National. The first round was scheduled to begin at 8 a.m., but mean old Mother Nature delayed the start by at least an hour because of bad weather. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Thanks, Michael. For me, to be honest, as a non-golf person, it's the funnest time of year. Masters and the PGA. Last year at Oak Hill, of course, for me personally, was great. But this is a real personal Masters tournament, not only for the players and the warring two parties, but for the fans. It's like a breath of fresh air. They're all together, right?
Yeah. It's really one of the signs for a lot of people that spring is here when you have the Masters. And again, you're right, Tom. There's the LIV Tour and the PGA Tour. They're separate. It's a very bad situation, in my opinion, for the game of golf. That being said, for the majors, they do come together. So it's great to see everybody back together because that's what the fans want to see. So a lot of folks are just saying, the game of golf, you got to figure it out, get these two tours
It's still
back
on
together.
CBS, right?
Yes, it is.
Yeah,
Absolutely,
I mean, it's.
And
I
I think the first 2 rounds might be on ESPN, maybe this Thursday, Friday. Yep.
But it's a huge deal for television.
deal.
I mean, this is the one. This is the big show. If Caitlin Clark shows up, do they get 18 million viewers?
I don't know about that, but it's big. It's arguably the biggest week in golf. So hopefully they'll get this weather cleared up for Michael Barr.
I still miss the Eisenhower tree.
That's right. Yeah.
Yes. Anybody who doesn't know, golf.
I miss the pimento cheese sandwiches.
Exactly.
With 3 cups of shredded white cheddar cheese, 2 cups of shredded yellow sharp cheddar cheese, 4 ounces of crumbled blue cheese. Somewhere in there's a pimento. It's in there somewhere. Stay with us. PPI at 8:30. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Interactive Brokers. Interactive Brokers charges USD margin loan rates from 5.83% to 6.83%. Rates subject to change. Learn more at ibkr.com/compare. All right, we've got a red on the screen after another bigger than expected jump in the cost of living last month. Now the shift not from when the Fed could hike interest rates, but rather if they'll do it at all. Former Treasury Secretary Lawrence Summers told Bloomberg there is a serious possibility the Fed's next move could be another rate hike. Right now we have NASDAQ futures down about 0.2%, Dow futures, S&P futures down about 0.3%. The 2-year yield at 4.97%, that's little change. The 10-year yield at 4.56%, and that's up about 1 basis point. We have the dollar stronger, Japanese yen, euro, British pound weaker. Right now Bitcoin up about 1% at 70,488. Companies making news. We'll start with Adobe. They're trying to catch up to the competition. The company's begun buying videos to build its AI text-to-video generator. Now, OpenAI, it showed off some similar technology. Shares of Adobe down 1%. And speaking of OpenAI, Sam Altman pitching a global coalition to help boost supply chips, energy, data center capacity. Sources are saying he met with investors and government officials in the UAE this week. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, Mateo, thanks so much. Paul Sweeney and Tom Keene getting to 8:30, where we'll have the PPI data. I guess important, but ever more important after what we saw yesterday. 2-year yield touched 5%, 4.97% right now in the 2-year yield. We've had a yield lift, to say the least. In 20 minutes, the governor of the state of Maryland, Wes Moore, will join us. He'll be in conversation, particularly the lead there, Anne Marie Horton. Wes Moore, of course, on the bridge. Where are we on the bridge? I mean, this is like...
I think they're starting... I mean, I think
there's
by
some
the
optimism.
Maybe by the end of May, they can get some opening there.
Well, you know, the Orioles have taken 2 from the Red Sox. So,
That's right.
You know, Baltimore, I'm going to downplay here today.
Can't
Governor of Maryland here in 12 minutes. That's a good thing. This is a really important a conversation, folks. Joining us now, Josh Emanuel, CIO at Wilshire. And what's great about them is they handle quiet pension money. And the well-timing here yesterday, Josh, with Jason Furman up at Harvard, put out the endowment returns of, I think, 20 or 25 major schools. The returns were mediocre. They were subpar the index. When you talk to balanced conservative retirement money, are they just saying we want to throw in the towel and just buy the S&P 500?
That's an interesting question, Tom. That's not at all what they're saying. I think institutional investors, continue to look for the right level of diversification depending on what their objective is, right? So if they have a specific target return or a specific liability that they're managing to,
they're managing to their actuarial assumption.
That's right. So they're going to look at whatever the required return is that they have, the required rate of return is that they have, and build a diversified portfolio around that. So while one might look at those returns and say, relative to the S&P, maybe those aren't as attractive. It's important to keep in mind what the objective is at the end of the day and what their benchmark is.
Do they do that through a 60-40, or is there a new calculus?
We've always been, advocates of the utilization of, alternatives as an example, and other types of assets that can help facilitate diversification, depending on what the client's underlying objectives are. But 60-40, I can't think of a client who's had just a pure 60-40 portfolio in a very long period of time.
So what percentage are alternatives do you think, of a model portfolio for a typical client, do you think?
Yeah, it's hard to say, definitively. It depends if it's a nonprofit, endowment foundation
I see some of these
versus
endowments
pension
with 30,
plan.
40%.
Sure, absolutely.
That is crazy.
Yeah, I mean, you can have certainly, some, nonprofits or endowments can have very heavy alternative allocations. Other clients may have a more conservative, more traditional structure. So it really just depends on what their objectives are and what that risk is.
All right, so we had a warmer than, as Abigail Doolittle will say, warmer than expected CPI print yesterday, and people kind of pushing out their rate cut assumptions for the Federal Reserve. The data we saw yesterday, we're going to get some PPI today. Did that change how you look at the market, or maybe your stock bond kind of weighting, maybe?
Well, first, let me start by saying we've been expecting this. So
Okay.
we've been communicating for some time now, really since late last year, that we felt that 6 cuts was completely irrational in terms of what was being priced into the market. You have a very healthy economy today, and while inflation has been, moderating, let's just say, if you just look at a 3-month moving average of, core inflation, you bottomed in August of last year, and we've been trending higher.
I looked at that chart yesterday. That was the number one chart. Just what Josh described, folks. How many charts did I look at yesterday? 14?
Yeah.
The number one chart is not what happened yesterday at 8:30. The number one chart is what happened in August and September last year when the trend changed on inflation.
Yeah, so we went from an annualized number of, let's just say, 2.5% roughly in August, right? If you take that 3-month moving average, annualize that month on month, roughly 2.5. Today we're closer to 5.
Yeah, Paul, Jason Furman had this. I don't have the tweet in front of me. I'll redo it, folks. It's so important. But Furman calculates an annualized shift back to the early 1990s.
Oh boy.
I don't think the public understands. This is early 1990s inflation.
Early 1990s, very good time for me. Equity valuations here. We're starting earnings really kind of tomorrow in front, heading into the weekend and next week. What do you think of the valuations in the equity markets these days?
Yeah, I think valuations are healthy. If you just look at an earnings multiple, a little over 21 times today relative to 2024 earnings. But as you may appreciate, we as institutional investors also look at the equity risk premium, right? So relative to where interest rates are today, that equity risk premium is virtually non-existent in the sense that the expected return that you can earn in equities based on our long-term forecasts, and even just using a Fed model, indicate indicate that there isn't really a very attractive risk-reward picture for equities versus fixed income. Now, that doesn't mean you don't want to have equities in your portfolio. It's just an indication of where the valuations are today. And I will also say that it's quite possible that valuations can get further extended from here, as we saw 2 decades ago almost.
What do you say to all of our audience listening and watching who say they're telling me to put aside more money for retirement? I mean, you deal with institutions where it's sort of codified and organized, and I'm assuming many are defined benefit programs where there's pretty rigorous contribution mandates. But the heart of the retirement disaster in America is this fiction of how much we put aside. Do you agree with that?
I think certainly there's trade-offs, right? So you either have to save more, earn more, or take more risk in terms of your portfolio, right?
Nicely said. Yeah,
right,
nicely
and
said.
so it just depends on where you are. Now, this is an environment where, given how well markets have done, whether you're a pension plan or you are an individual investor who's in retirement, where you potentially have your retirement portfolio fully funded. This is an interesting time for those investors to be thinking about diversification. With a U.S. 10-year government bond at just over 4.5%, you can really immunize a lot of that, some of that liability risk associated with your retirement by moving more of your allocation into bonds as opposed to just purely, an equity portfolio today. And I think thinking about diversification in this environment is really important.
Tom, the next time we talk to Josh, we're going to do a remote from his offices, literally on the beach in Santa Monica. I'm not kidding. They are on the beach.
Really?
Yeah, you have to clean your feet off when you come into the office, all the sand.
So you come up Sunset Boulevard, you hit the famous cigar store, the Cuban cigar store, and then you keep going and have cocktails at the Sunset Tower.
Well, I'm going to Shutters on the beach. That's where I've got my suite there.
Okay. How's the LA economy?
It's, I think, improving.
I agree.
I
think it's beat down with the whole California malaise thing.
Right.
And I just don't buy it. I see a vibrancy there.
Yeah, I mean, if you go out, the restaurants are busy. Plenty of traffic.
Plenty of traffic. Okay. There you go.
Josh Emanuel, we'll see you in February, first week,
that's right.
live from LA. He's with Wilshire. They speak to a lot of institutional money. I learned a lot there, folks, about where we're going if you're not going to own the triple leveraged NVIDIA fund. We had that guy yesterday.
We did. I mean, it's all about AI, Tom. That's what the kids are talking about. So
it's all about free cash flow. It's going to be interesting. Earnings season. It begins tomorrow, am I right?
That's what I understand.
Yeah, James Dimon, he'll be reading his 62-page annual letter at the conference call. That'll be watching paint dry. I'm kidding, Mr. Dimon. Please come on, Jamie. We'd like to talk to you tomorrow about your letter. I think your letter's pretty darn good. Westmore, the governor of Maryland, in a moment. Good morning, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures pointing to a lower open after yesterday's CPI report came in hotter than expected. Today, the focus shifts to the producer price index for March. We'll also get initial jobless claims for last week. Right now, we have NASDAQ futures down 0.2%. We have Dow and S&P futures down about 0.3%. The two-year yield at 4.96%, and that's a little change. Actually, that's down 1 basis point, and the 10-year yield at 4.54%, and that is little change. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Here's what we're gonna do. The governor of Maryland is a little busy. He's looking at the middle relief of the Orioles as they make a dash against the Yankees. Westmore will be with John Farrell, Lisa Abramowitz in a lead there, Anne-Marie Horton as well. We'll do that in a bit. We're going to squeeze this in maybe in front and also maybe after Westmore. We'll see how the scheduling goes. Scheduled yesterday, Dennis Gartman on the trade of a decade. And I said this trade is so important and has so much explanation needed that I'm not going to ruin Dennis Gartman by an inflation report, which was inconsequential.
Right, exactly.
Joining us now, Dennis Gartman on gold in yen. Dennis, you have absolutely nailed this. Gold to the moon, yen down to a 34-year weakness at yesterday. When do you cover this massive moonshot gain that you've got?
Years from now. It's going to be quite some period of time. Japan is concerned about the fact that the yen has traded to 152, and they're actually speculating or ruminating about the fact that they may intervene to stop the yen from weakening beyond 152. But when I first started trading foreign exchange back in the 1970s, yen was trading 350 yen to the dollar. It traded 250 yen to the dollar. It traded 150 yen to the dollar. So the fact that we're at 152 yen to the dollar and the possibilities of some intervention are, I think, inconsequential. I think if the Bank of Japan were to intervene against the Japanese yen at 152, maybe it goes to 150. But I think I think over the course of the next several years, we trade yen back to 200, maybe 225.
Right.
Gold has gone from the lower left to the upper right in dollar terms. It's gone from the lower left to the very upper right in yen terms. It's gone from the lower left to the very upper right in euro terms, and it's going to continue. So it's inflationary problems around the world, not just here in the United States. I've been bullish on gold in yen, euro, and dollar terms, and continue to be so.
I can't say enough, folks, about what you just heard there is classic Gartman, which is if you're not a student of history, you don't get to win. And sometimes you lose money. Gartman lost money in 2000. I think it was 21 he lost some money there as well. But the study of history, every chart on yen ends 3 years ago. Gartman has the courage to go back 30 years to look at the different trends and vectors. Paul, jump in on gold.
Dennis, who is buying gold these days?
Central banks have been the major buyers. The Bank of Japan, the Bank of China has been a very large buyer of gold. The Bank of Russia has been a very, very large buyer of gold. Central banks have been buyers of gold, and they are the sponsors of the gold rally thus far. I think gold continues to go higher because of the fear that the United States may trap Russian assets here in the United States to pay for Ukraine. That's been a discussion several times. And if that were to occur, gold would go up another $50 to $100 that day when that announcement comes out. So I think gold wants to go a lot higher. Central bankers have been the buyers. I'm a little concerned that we're actually seeing the public in rather aggressively. So for my own account, I actually sold a few out of the money calls against my gold miners on Monday and Tuesday. But I think gold wants to go demonstrably higher, and those calls expire tomorrow, and I'm slightly out of the money on them. So that's turned out to be a good idea.
So have the miners traded similar to the underlying bullion?
Miners have lagged well behind bullion for the course of the past 5 years, to be quite honest, and now they're beginning to pick up and catch up. I think that if you're going to be involved in gold, GLD is where I've been with the bank, with the endowment fund at the University of Akron. But I think for the public, if you're going to be a buyer of gold, be a buyer of the gold miners. I think they're starting to catch up to the movement that we've seen in bullion over the course of the past several years. They have become very cheap, and they want to go, I think, demonstrably higher.
Dennis, thank you so much. Please hold on. We'll see if we can get you back. Dennis Gartman there on the call of the decade. And now a conversation with the governor of Maryland.
The economic impact of the Port of Baltimore. The Port of Baltimore is worthy and contributes about $70 billion to the American economy. The Port of Baltimore is the largest port in this country for new cars, for heavy trucks, for agricultural equipment, for spices and sugars, for coal. That a huge chunk of the American economy relies on the Port of Baltimore. And so I'm thankful that the president has led and rightfully acknowledged that what happened last week was not just a human catastrophe. I mean, we lost 6 Marylanders during this catastrophe. And it was not just an economic catastrophe for Maryland or for the region. This was an economic catastrophe for the country. And so our ability to be able to rally in a bipartisan fashion and to be able to get the port reopened and reopen and get the bridge rebuilt is going to be a national priority.
So 2 issues there. So reopen the port and reopen the bridge. Can we deal with the first one first? Reopen the port. How straightforward is that going to be?
This is a remarkably complex operation. We've never had a maritime disaster like this where you have not only a ship, a vessel, that's the size of the Eiffel Tower and the weight of the Washington Monument that is now stuck in the middle of the Patapsco River, and part of the reason that it's stuck in the middle of the river is because it has a bridge, an iconic bridge, that's sitting on top of it. 3,000 to 4,000 tons of steel are sitting on top of the bridge, and the remainder of the bridge is sitting at the bottom of the river. So this is still a remarkably complex operation, one where we have our divers who are in there every day, and they literally cannot see anywhere between a foot or two in front of them because of the amount of wreckage that's in the water. And so the ability that we've now been able to open up 2 channels that can now have up to a 14-foot depth. So you can get certain commercial vehicles. We've had 59 commercial transfers that have already taken place. And hopefully by the end of May, we'll have fully functioning operations for the port. Is a staggering accomplishment when you think about the speed and the coordination that was required in order to make that happen.
So end of May for the port, Governor, but what about the rebuild of the bridge? What does this timeline look like?
The rebuild of the bridge is going to be a longer timeline. The thing that we know is for that bridge that over 36,000 people went over that bridge every single day. That was the bridge that got people from where they lived to where they worked, from where they lived to where they worshipped, to where they lived to where they went to school. It was also a key and a crucial part of port operations because for the Port of Baltimore, it's not just maritime operations, it's also rail and it's also truck operations that exist in the Port of Baltimore. And so in order to truly get the Port of Baltimore up and going in the same kind of fashion that it was before, getting that bridge rebuilt is going to be imperative, and we know that's going to be a longer timeline, but we are committed to making sure that we get the key bridge rebuilt.
And I know that's why you're going to be in Washington today to be speaking to lawmakers about the funding to rebuild this. I was struck by what Senator Cruz said yesterday. He says that he wants to get this rebuilt as soon as possible, but he said it's bureaucratic dithering and lengthy environmental reviews, kind of blaming it on Democrats for this bureaucracy, environmental reviews that could potentially make this a long-term process and not as quick as, say, you and residents of Maryland want to see. Do you agree with him that this should be really fast-tracked?
Well, I'm thankful that Senator Cruz is a yes on making sure that we can get 100% funding for it. And I'm thankful that Senator Cruz understands how imperative it is that we both get the port reopened and also get the bridge rebuilt. I also know that the White House, I had my first phone call from the White House at 3 o'clock in the morning of the tragedy. And the White House has been with us every single step of the way. The Secretary of Transportation was literally down there, boots on ground before noon, to be able to assess the damage and assess what they can do to help. I have yet to receive a phone call from Senator Cruz. I've yet to receive a visit from Senator Cruz. I would welcome him to come to Baltimore for him to see exactly the circumstances and the situation that we're dealing with. And I'm sure when he came, he would also see that there are members of the Biden administration who have been on the ground the entire time, and I'm sure he would spend time with them as well when he came to Baltimore. I know this needs to move quickly. This needs to move fast. We need to focus on safety, and we've got to get this thing rebuilt. And I'm glad we are building a bipartisan support structure around what it's going to take and around what that can look like.
You talk about how quickly it's important to rebuild the bridge, and I know a lot of people would agree from every facet of the region. How much are you exploring other types of financing if it doesn't come from the government, whether it's issuing municipal bonds or getting public-private partnerships?
I think that all options should be on the table, and all options are on the table. You know, I don't come from a political background. I'm an Army guy. I was a paratrooper with the 82nd Airborne Division, and then when I left the Army, I started a business. So I understand the role that the public sector, the private sector, that philanthropy is also going to play in this. And even if you just look at the past week, you know, we've used every lever at our disposal to be able to address this issue. I actually issued an executive order that released $60 million of state funding that went towards supporting our port workers. We actually signed legislation that focused on things like providing scholarships to the children of transportation workers who have died on the job, and also providing additional supports for businesses. We also helped launch something called the Maryland Tough Baltimore Strong Alliance, which is over 80 organizations, private sector, businesses, and philanthropy. We've now raised over $15 million that's going towards port workers, and also have a commitment from businesses to do things like they're not laying off their workers. If they have to temporarily move operations from the Port of Baltimore, they've committed to bringing them back to the Port of Baltimore. So we know it's important to use every single lever at our disposal, and that every sector, private sector, public sector, philanthropy have all got to be involved and at the table in order for us to get to our long-term conclusions.
Well, as a Marylander, as a business owner, as a military man, you fully understand the importance of infrastructure and what the ramifications could be the longer that this goes on. Is there a drop-dead time where, say, it takes 2 years and that's the maximum that it could take to rebuild this bridge and get operations, to reopen the port, to get things back up and running, where Maryland, Baltimore can withstand that, versus after that, where it becomes a real financial weight that has much more punitive consequences?
Well, it's a financial weight now. And it's the reason that we are moving as fast as humanly possible. It's the reason that we have 24/7 operations that are going right now. And that cadence, that speed, it's not going to stop. I'm committed to making sure that we are moving with speed on this, because we have to remember there are tens of thousands of port workers that right now are being impacted by this. There are entire communities that now have watched their way of life completely upended. There are industries that the country relies on that are now at either a stop or a stall because of what has happened with this port tragedy. And so, the how imperative it is that we move fast on this, it sits with me every single day. And I know we are going to, and I'm going to demand 24/7 operations until we accomplish 4 goals. Bring closure to these families, reopen these channels, make sure we're taking care of our people who've been impacted by this, and getting the bridge rebuilt.
Governor, how much money do you need?
Well, the truth is that we don't have an official price tag on that right now. That we know this is going to be a long journey. We know this is going to be something that is expensive. We also know, though, taken place thus far. If you would have asked me 2 weeks ago, seeing what I saw, and said that 2 weeks later we would have 2 commercial channels open, that by the end of this month we should have up to a 35-foot depth in draft that should be able to get a lot of the new cars and roll on, roll off that the Port of Baltimore relies on up and going, and by the end of May we should have the port fully functioning. I would have said, when you look at the damage and the devastation that we saw, I would have said that seems very ambitious, but that's where we are. And so we know this is going to be a long journey. We know this is not going to be an inexpensive journey, but it's a journey that we all have got to be committed to, because this means everything to not just our region and our state, but to the long-term growth of maritime operations in the American economy.
Governor, we appreciate your time, and I know this is going to be a long road ahead for you and your state, and it's going to be an ongoing conversation, and hopefully we can talk to you again in the future. Governor Westmore, thank you, sir.
Governor Moore there of Maryland on a very difficult infrastructure and engineering issue of the Baltimore Harbor. We welcome all of you worldwide on Apple CarPlay and YouTube. Search Bloomberg Podcasts. If you're out on YouTube, you can see how good-looking Dennis Gartman is. He's been more than patient to stay along here. Dennis, we were talking your extraordinary trade. Folks, I'm talking about lifetime trade of gold, but priced in Japanese yen. Let's move on, Dennis, to the CPI report of yesterday. Is this a pandemic CPI, or is it a CPI from yours and my youth?
I think this is a CPI from yours and my youth. I think we're starting to see inflationary pressures incumbent everywhere. Grain prices have stopped going down and have started to go up. Meat prices have been going up for a while. Clearly, crude oil and heating oil prices have been going from the lower left to the upper right, and I think they're going to continue to do so. Copper prices, tin prices, aluminum prices have been going up. This is, I think, a problematic circumstance, not something that's going to go away anytime soon. And that's been one of the driving forces behind the purchase of gold and gold's bull move. So I'm a little concerned, again, that the public has gotten enamored of gold in the course of the past week or two. But the fact that we've taken gold down $15 or $20 from its high probably took a few of the weak hands that had come into the market in the past couple of days. I think if you want to be a buyer, you've probably got another $15 to $20 on the downside in gold, but then I'd be a buyer there, no question. And again, I think the real trade is to own gold in dollar terms, yen terms, and euro terms. This is something that's just beyond a dollar circumstance, beyond a U.S. circumstance. This is a global circumstance that's prevailing right now.
Dennis, given that inflation print we saw yesterday, what do you expect this Federal Reserve to do?
When 2 months ago, I in my biweekly newsletter, I said that it was comical that people were expecting 5 to 6 cuts in the overnight Fed funds rate. I thought there'd be 2 to 3 at most. Now I think it's going to be one at most, and if we probably get one, it'll either be in June at the June meeting or at the November meeting. Probably at the November meeting, simply because it takes place after the election, and it would eliminate the concern that the Fed is political in nature. So I think there's only one to come this year, and in all likelihood, it'll be in the November meeting for the FOMC.
Dennis, I want to go to the back end of the Gartman letter of years past. Mr. Gartman is somewhat retired when he's not out trying to qualify for the Masters. And, Dennis, I got two questions left. And let me begin first here with the politics of the Gartman letter. I think it's no surprise to our audience worldwide, possibly Dennis Gartman leans to the right. Is there a separation between Republicans and the Trump supporters, or are they one now?
No question. No question. I am not a Trump supporter. I will vote for Mr. Trump, but I'll do it with my nose held tight as I do so. Mr. Trump believes in tariffs and protected trade. Republicans believe in free trade and non-tariffs. Mr. Trump believes in putting his fingers into the pie too much with regulation.
Right.
Good Republicans are opposed to that sort of thing. So yes, I think there is a dichotomy, a bridge, a chasm being built between old-style Republicans such as I, libertarians such as I, and Mr. Trump.
You are more qualified, Dennis Gartman, than anyone I know to answer this question. You served the University of Akron on how they run their money, and he was not one but two NC State Final Four.
Yeah.
Dennis, do you observe that the mania over athletics in America, like at an amazing NC State, ends up helping the NC State English department? Can you make the attachment from big time sports over to Caldwell Hall and the Melissa Crow poetry reading and contest at NC State?
You've done your homework. That's very impressive. Thank you for that. I'm the chairman of the University of Akron's endowment, but I was on the board of directors of NC State's endowment for 15 years, and my heart is still with NC State. It was a great run. Amazing fact that both the men and the women made it to the Final Four. And I think over time that's going to be beneficial to all of our programs at NC State. There'll probably be an increase in the money coming into the endowment, and there'll probably be an increase in the number of people applying to the university. So it was a great run. God bless the NC State, and here's to the fact that we may vanquish our foes at the University of North Carolina and Duke in the coming years.
Hugely impressive there. Did you hear that?
I heard that.
I believe I heard that. That was to the west. Dennis Gartman, go away. Dennis Gartman, they're on gold in yen, the trade of the last 10 years. There's no other way to put it.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Bloomberg Surveillance with futures and negative 25 PPI here in 40 minutes. We're always brought to you. The newspapers, the Lisa Mateo Hour, brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost. Global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Do that at ibkr.com/RIA. I looked at the newspapers. They were nuts today, to quote the Angry Beavers. Lisa, tell us about the newspapers.
This is something we talk about all the time as we start to see people roll into the office. New York City's return to office rate nears 80%. That's what they're saying, and that's thanks to banks, actually.
Okay.
It's a good write-up in Bloomberg. It points to Goldman Sachs, JP Morgan Chase, one of the two of the big ones. A rebound also in Miami, 2 people going back to the office. So the study says return to office rates last year for both cities were the highest among 7 major markets, above the national average of about 63%. So more people coming into the office.
Not buying it.
No, you're not buying it?
Although
look at
the senior BI management is in New
by.
York today, so that's a rare sighting. So good for
You
them.
know what I find interesting? I know, because of time, I can't go on all day about this. I'm watching every single tweet. In Elon Musk X, there's a feed of all the busted suburban Class B properties.
Yep.
And to me, that folds right over into what's happening in Manhattan or Chicago, or a great article, I'll give the Journal credit, on St. Louis the other day. There's something going on out here, Paul, way bigger than what we've got here.
Yeah, I think the commercial real estate issue is going to be a multi-year issue that we're going to be dealing with. What else you got?
New York City airports. You've been there lately. They look a little better,
Yes.
right? Yes, they look much better. 2016, you remember JFK, Newark, LaGuardia. They were among the 10 worst.
Yep.
So now things are getting better. You have LaGuardia's new Terminal B, Newark's new Terminal A. In March, LaGuardia actually earned the title for best airport in North America.
Wow.
But you have JFK, too. They're undergoing a $19 billion worth of construction on the terminals, expanding ones, upgrading the roadways. By 2026, more than $30 billion in investment is going to go into making them all state-of-the-art airports.
What I noticed in that article, which goes to the magic of very high-feed Heathrow or Zurich, is the maintain. And they're putting incentives in, I think now, so that these palaces that we've built won't be ruined in 2030 or 2035. Right. To me, the maintenance of these gorgeosities is really, to me, important. And the lines have been pretty good recently, even at Newark.
I'm heading over to Terminal A at Newark in a few hours.
I'm afraid to ask where are we going.
We're going down to Durham, North Carolina, to see our friends at Duke. But the Terminal A it is amazing. It's really nice. It's European nice.
Now you're going to talk. Is Calipari had you to come down to see about Arkansas? I mean,
no, not yet. But I'll check in with Coach Shire down at Duke.
Okay, you do that. Yep. Well. Lisa, what else do you have?
We talked about the Masters before, kicking off Augusta National today, right? A little bit delayed because of the weather. But the Wall Street Journal has this good look into the golf industry itself. You know, the golf is a great thing, but is it a good business? That's the question. So there's been a number of rounds played, growing nationwide, uptick in new golf course development. Private clubs have waiting lists for memberships. Some are saying, though, that popularity is going to start to fall, but the way people experience golf, that's also changing too, which is helping the sport. You have the Top Golf era, right? People going to Top Golf, driving ranges. Yep. You have the mix of entertainment, drinks, friends, everybody having a good time. Golf club memberships offering more. They're converting these boardrooms into family dining rooms. They're offering daycare, junior golf instruction. So they're offering more.
I'm looking at have you done Top Golf?
I've done it. Yes, it's a lot of fun.
It's a lot of fun.
Yeah.
I'm looking at it, and they want it to be one big party, alcohol-led. Okay, great. Can they teach me to play golf like you play golf?
They can
like
teach
Damian Sassower
I don't know about Damian Sassower, but I mean, the wait list at our club is 18 months. It's the biggest it's been in about 15, 20 years. So, and you think about the pandemic when everybody was locked down, the golf course was packed.
I just want everybody to understand.
It's the one place you can go.
Yes.
And Sarah knows this in the control room. Sarah, the closest I get to a wait list at a club is Famiglia at Madison and 97th Street. You have a wait list at your club?
Yes, 18 months.
How much, pray tell, is the upfront money once you just wander off the wait list?
I don't know what the number is. I'm going to say 50.
Wow.
Maybe.
50. $50?
Yes. Put a couple
50
comma. Yeah. I would think. Yeah, something along those lines.
Lisa, we're not breathing the same oxygen here.
Oh, gosh.
What else do you have?
Well, since we're talking about the price of golf, okay, so all the billionaires moving to Miami, the price of golf memberships there have skyrocketed.
Yeah,
okay, you have top clubs around Miami, doubled or tripled their membership fees since 2020. Here's the figure: high 6- and 7-figure joining fees. That's what they're charging. Yeah. Nearly impossible to get in. Like you said, they do have the wait list too, but then there's more that are coming in, so they're starting to grow.
There's 1,000,001 golf courses down there. You fly into like Miami or Fort Lauderdale, everywhere you look, there's a golf
waiting lists.
Crazy.
But they're building new ones. There's a New York-based developer, Whitcoff. They're planning one in Palm Beach area, and that's going to cost $350,000 just to join.
I caddied for years at Country Club of Rochester and at Oak Hill. I'm honored to caddy there in '68, not for the Open, the Lee Trevino Open. But I can't imagine how busy the courses are now. I can't. Paul, I can't imagine the pressure on a Saturday to keep it moving, and there's some guy in the green lining up a 10-foot putt and taking an hour.
Friday, now that nobody works on Fridays, everybody hybrid works on Friday.
Yeah.
Packed on Friday.
That's true.
It's kind of like the old days when we have like the cars all lined up. But anyway, so I don't know.
Well, Lisa, thank you so much. And that gets us going. I'm getting the details. I don't have them yet, but we have really important Masters updates across Bloomberg Radio coming up today. Sarah, give me the time on that, please. Is it like 12 noon, 10:30? We wander in. Sassower's got to get out of bed to do the updates.
Yeah.
But we've got Masters updates coming for you on Bloomberg Radio. I'll give you those details here in a bit. We're 35 minutes away from PPI. Lots going on Apple CarPlay and YouTube. Search Bloomberg Podcasts. My knowledge of the Masters, well, it goes to Danny Noonan and his effort to get into college. I'm sorry, it's the greatest 98 minutes ever.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, worldwide, on economics, finance, investment, international relations. Yes, we're going to talk up the Masters in golf. Can we get Sassauer in? Is he out on the course?
I'll check on that. I'll check his people.
We're going to have fun here on a Thursday. PPI here in 29 minutes. Madame Lagarde will be speaking here in 15 minutes. They'll be speaking with headlines out. Rich, help me here at 8:15, and then Lagarde on roughly half an hour later with an important press conference as well. What we're going to do is give you the convo. John Farrow told me convo's the new word.
Okay, all right.
You don't say conversation, you say
Very good.
convo.
Whatever.
Our convo is going to be with Kit Jukes.
Yep.
Marcus Ashworth always joining us. Huge value add on this half hour of ECB coverage. And then we go on to Frances Donald, authoritative on the rebuild of the Montreal Canadiens. She will join as well. Futures at -26. Bloomberg Surveillance, and we have the support, and we say thank you to Cohn Resnick, Advisory Assurance Tax. Let Cohn Resnick's enterprise risk advisors help you build confidence in your supply chain using data analytics. Visit CohnResnick.com. ECB Day, we spell it out. CohnReznick, CohnResnick.com. And we thank them for their support. We're on Apple CarPlay, building 20 nations worldwide and across the U.S., on Android, on Google Play, on Apple CarPlay, the Bloomberg Business app. I'm just blown away by YouTube. They came to me and they said, Tom, we want to put you on YouTube. I mean, yeah,
nice.
Great. My exercise guy's on YouTube. Do you know how many followers my exercise guy has on YouTube?
First of all, I didn't know you had an exercise guy.
I have an exercise guy.
Yeah, I thought, Lisa's my exercise guy.
It's what it is. But, the bottom line with my exercise guy, he has 4.3 million followers.
Yeah, I don't think we're quite there yet.
This YouTube thing is ginormous. We're thrilled to be a part of it. We're out to search Bloomberg Podcasts, and you will see us there. Right now, from the Interactive Broker Studio with our Bloomberg Business Flash, Lisa Mateo.
You got it. Futures right now, they are falling after yesterday's hot U.S. inflation print. Today, the focus shifts to the producer price index. That's in less than half an hour from now. We'll also get initial jobless claims for last week, and we can't forget the ECB's policy announcement. So stay tuned for all of that. Ahead of it right now, NASDAQ futures and Dow futures down nearly 0.5%. NASDAQ futures down 0.3%. We'll go over to the yields. The 2-year yield at 4.97%. That's little change. The 10-year yield at 4.56%, and that's up about 2 basis points. Spot gold higher at $2,337 an ounce, and we have NYMEX crude $85 a barrel, Brent crude at $90 a barrel. To earnings we go. We'll have used car dealer CarMax down 9%. Reported net sales, operating revenue for the fourth quarter missed estimates. And we'll stick with cars. We have Mercedes recalling more than 340,000 GLE, GLS vehicles built between 2017 and 2023. Could be a potential fire hazard. Their ADRs are down about 1%. And United Health Group, they're in the spotlight. News that its chairman and 3 senior executives netted combined $101 million from stock sales before the U.S. probe surfaced. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. The Mets are rained out. It doesn't matter. I mean, the Mets are rained out. It's
Atlanta.
Really, it's not a big deal. The Masters rained out. That's important, Paul. 8 a.m. tee time, and you're lucky if you get out there at 10:30. What does that mean for the guys in the backside? I mean, are they playing in the 15th hole in the dark?
Yeah, I mean, the challenge is, again, the Masters looking to start around 10:30 a.m. local time after, I guess, some of the heaviest rain missed Augusta National. But again, pushed back about 2.5 hours. So the question is, can they finish out round one here today? If not, they'll have to come back a little earlier tomorrow and finish it out.
We'll have to see. Away we go, and we're going to look at the ECB right now. No one more qualified than Kit Jukes. He's chief foreign exchange strategist at SocGen, writes a blistering, wonderful 3, 4, 5 paragraph essay pretty much every morning. And he's a Kit. Paul wants to ask about the ECB and all that. I want to ask you, Kit Jukes, about what I observe, which is Americans going to Europe, and we're in these little tourism bubbles of prosperity. And yet pros like you are telling me Europe's flat on their back. What does the rest of Europe look like away from the Tony parts that Americans travel to?
I think bits of it in old Europe are struggling. I hurt myself skiing, and my Austrian doctor, first thing he said when he found out what I do for a living was he gave me his opinion on the German economy and the problems that they're having. And I think there's so much pessimism there might be too much. But if you've been relying on cheap Russian gas to make chemicals and cars and sell them to the Chinese, you've got everything gone wrong in your life at the moment. And adapting your economy to new realities is tough for them. If you've got governments that have got, commitments to get fiscal policy under control in a way that your government definitely doesn't have or hasn't had for the last couple of years, you've got a lot of fiscal restraint. And so Northern Europe, I think, has been suffering. Germany's been suffering, France to some degree, the UK, obviously. Spain, Portugal, Italy, they're having a much better time, which for an American tourist, just go to Florence and you'll find everything's good or something.
Very good.
Have
I think
you
a
ever
lot of
had a
people.
steak in Florence?
I haven't been to Florence.
You literally go to Florence. You have to go to Florence.
There's a lot of places I need to go.
They have, in the middle of a square, just up from Galileo's house, they have a little Gucci store, most dangerous store in the world.
Sure.
It is just planted in the middle of the square. Continue.
Hey, Kit, so is there I'm just trying to think about the economic data we saw yesterday, the inflation data we saw yesterday in the U.S. CPI. Is there a bear case for the U.S. dollar?
No, there isn't a bear case. There is a ceiling that it gets hard to break through. The argument you can make for the dollar is that we all know the U.S. economy is exceptional, and the dollar is very strong. So how much stronger can it get? That's the question. Mm-hmm. The bear case for the dollar comes if there's enforced fiscal restraint in the future, if there's a problem with just the sheer weight of treasuries that have to get sold into the system, and if there's anything like there's a buyer's strike. I find that really hard to believe. But if there's concern about the credibility of all of these things. But otherwise, I think the most likely outcome is the most miserable one for someone in my job, which is the dollar is strong, stays strong, but can't get vastly stronger.
Kit, this is important. Dennis Gartman just on, and he has a trade of the decade, buying gold in Japanese yen, strong gold, weak yen. He models out looking back 10, 20, 25 years when yen was 200 it was much weaker, 200, 300, whatever. What are the ramifications for our listeners and viewers if we get 200 yen, dramatically weaker, unimaginable Japanese yen?
Even you will have to take someone with you, all of your family, to Japan because it's beautiful and it's too cheap to be real, and have photos taken and the cherry blossom in the spring and do the whole thing. I think they'll become an economic superpower again if we get enough of that. Their stock market will go nuts if that happens in terms of what they can do, particularly because their biggest neighbor, China, is clearly trying to prevent that currency.
I don't mean to interrupt, but just because of time, do you believe that Warren Buffett is long Japan because he's short Japanese yen, strong, resilient dollar?
He might have some kind of a hedge on it, but frankly, up here, I think the yen's so cheap up here, I would just be long Japan, period.
Yeah, Warren Buffett said the same thing, and we haven't heard that long Japan since, I don't know, the late 80s, it seems like. Kit, what do you make of the inflation environment here in the U.S.? I mean, January, February, and now into March, it seems like it's more than a blip. What do you think?
Absolutely. Look, we all had this assumption. We had this extraordinary inflation jump on the back of everything from the Suez Canal closing to the energy crisis to the reopening boom. The whole thing all arrived at the same time. So everyone turns around and says, we think inflation is going to come down quickly. Then it's going to plateau at an uncomfortably high level. And then as the economy slows, inflation will come down slowly.
Yeah.
True. But if the economy is not slowing anymore, and I can't see any signs of it, you don't get lower inflation.
Right.
And the bits you've got inflation in, hospital services, car insurance, these are the bits where I don't see that inflation running away anytime soon.
Kit, I got 15 seconds. Katie Greifeld emailed in and says, can you ask Kit, does SocGen have some good opening ceremony tickets for the Olympics in Paris?
Oh, yeah.
I mean, Kit, can you do something for Catherine Greifeld?
I'll find someone in Paris if I know. If I could get hold of some, I would. But I tell you, they keep them close to their chest back at head office on those ones, unfortunately.
Kit Juice with your Olympic ticket report there. He's with Société Générale, of course, a derivatives of mathematics heritage of all of French mathematics and, of course, of Paris. Futures negative 23 before PPI. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. A sweeping Russian missile attack on Ukraine destroyed the largest power generating plant in the Kyiv region as Vladimir Putin's forces exploit gaps in the war-battered nation's air defense. The strike set ablaze the plant about 28 miles south of the capital. The facility was hit by 6 missiles early today. The Biden administration has put rules in place expected to close what is often known as the gun show loophole. That means they must follow the rules that go along with that sale, like background checks and being licensed. Attorney General Merrick Garland spoke today in a Justice Department video.
This regulation is a historic step in the Justice Department's fight against gun violence.
Attorney General Merrick Garland, Michael Bloomberg, founder and majority owner of Bloomberg News, parent of Bloomberg LP, helped found and is a current supporter of Every Town for Gun Safety, which advocates gun safety measures. A federal appeals court will hear arguments today about a ban on gender-affirming care for minors in Arkansas. A federal judge struck down the first in the nation ban last year, ruling it's unconstitutional. Arkansas enacted the law in 2021, and the state appealed the judge's decision. Loyola Law School professor Lori Levinson is also a former federal prosecutor.
This is one of the most significant cases that the transgender community has faced. And the way that the Eighth Circuit goes on this could indicate how other jurisdictions will as well. It might be a case that actually ends up in the Supreme Court down the road.
The ACLU of Arkansas filed the lawsuit challenging the Arkansas law. At least one death is being blamed on a storm system that caused severe damage in some Gulf Coast states Wednesday, impacting over 30 million Americans with tornadoes, flooding, and more. And round 1 of the Masters begins today at Augusta National. The first round was scheduled to begin at 8 a.m., but the start has been delayed to at least 10:30 a.m. because of bad weather. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Craig Moffett, Michael Nathanson over at Moffett Nathanson, channeling Paul Sweeney. It's like they called you up and they said, Paul, help us write the report. And this is on theme parks is the future of media, which I don't buy for a minute. I'm sorry, I don't agree, but what do I know?
And those are two of the smartest analysts on Wall Street. So if you want to get smart on the tech, media, telecom space, Craig Moffett, Michael Nathanson over Moffett Nathanson, that's the place to start. Great report out this morning looking at Disney, looking at Comcast. They both have significant theme park businesses, obviously Disney, but Comcast through the Universal properties, also very big. And you know what? Those businesses are great businesses, solid double-digit cash flow growers every single year. Both of those companies are investing a lot of capital into those businesses. And as the cable network business continues to wither, these become bigger businesses
Epic
for this.
Universe is what they're building in Florida with Super Nintendo World.
Yes. I mean, they're going to spend $1 gajillion. That's kind of my estimate on this. It's just massive.
Michael Nathanson, we'll try to drag him on here. We'll talk the Yankees as well. Good morning.
breaking news from Bloomberg.
And from Frankfurt, Germany, and Bloomberg Economics out of London and Frankfurt, the ECB decision. The data points are pretty much on target. No surprise there, but it's the language of the headlines. Wage growth is gradually moderating. Most measures of underlying inflation are easing. We didn't see that in America yesterday. Rates will be sufficiently restrictive for as long as needed. And finally, we have opening ceremony tickets here at the ECB. Lagarde somehow had that in. We will hear from Madame Lagarde here on an important ECB decision and to triangulate the markets. Euro weakens fractionally out to 4 decimal points. 107, Kitchuk's Sakjan just on, looking for weaker euro. Out to 105, we are not there. 107, but down from the 108, 109 area of the recent days in the U.S. markets. Futures, negative 23. The VIX out nicely to 16.55, showing some of the inflation pressures out there. ECB, domestic price pressures are strong. I love this, Paul. Help me out.
Yep.
ECB to follow data-dependent approach to determining rate path. Can we all go home?
Exactly. Data dependent. So again, kind of right in line, Tom, the ECB leaves the deposit facility rate at 4%, right in line with expectations. Now everybody's kind of saying, all right, let's get to June now. And maybe, what are they going to do in June?
Maybe if the Fed did this, where the Fed decides, and yes, we've got a couple programs coming up here, Kieran Buchanan driving that forward, but the Fed decides if we had 400 headlines come out like we get here at 8:15 Wall Street time, maybe it'd be easier. It'd be clear. Traders hold ECB rate bets steady. That from Bloomberg, very important. Pricing 19 basis points of cuts by the time Marcus Ashworth has his first gray hair. Joining us right now from London, Marcus Ashworth. Marcus, this is one of the most valued traditions every 30 days or 6 weeks, whatever it is, to have you on. How slow is Europe? How different is Europe right now, the continent, ex-Switzerland? How different is it as compared to America?
It's almost diametrically opposite at the moment, and that's why I'm disappointed that the ECB has chosen to wait for yet more data-dependent information, which is going to tell it exactly what it already knows. We're going to get a cut in June. That's a long 8 weeks away. We had the ECB's own bank lending survey out this week, which was just diabolical. I mean, it shows you that demand for loans is dropping even further than they thought. They thought it was going to see a rise. It actually fell. It fell quite substantially. There's real problems in Germany, particularly the demand for borrowing, let alone allowing borrowing. It's the worst type of problem you can have when people don't even want to borrow. So in that sense, I think with German manufacturing heading back down again on the PMIs and a range of appalling fiscal numbers out of both Italy and France, which shows you that the government is not going to be there to help in the way that it clearly has been throughout the pandemic and onwards, that we don't have that big stimulus boom that you see in the States, which is continuing to make everything else look, frankly, dead in the water, and that's where Europe is.
Paul, John Farrow. First time I saw Farrow was at the ECB.
Was that
He's on the lawn at Frankfurt. I mean, who the hell is this guy?
Yeah.
The first time I saw him. Farrow demands a red sticky. So we've got a red sticky, a headline, a famous Bloomberg red sticky. ECB, rates may fall if we're confident, Paul, inflation heading to 2%. Good luck with that.
Exactly. So, Marcus, I mean, give us a sense of how the economies are across the European Union here, because, I mean, I think, again, as you mentioned, the stimulus here in the U.S. is, boy, it's done its job. But give us a sense of how in need do you think of the European economy is for rate cuts?
What level of desperation do you need? I mean, do we have to get down on our knees and beg these people? But, I mean, literally, 4% rates may not sound high compared to what they are in the UK and the US. But practically speaking, when they've come from negative 50 and 8 years of sort of zero and below rates in Europe, you know, this is a very high rates, relatively speaking. And, you know, really, there's no signs of life. I mean, the economies are either flatlining at best or they're sinking into recession like Germany. And there's no prospect of any growth. That's the thing that's depressing. There's nothing good on the horizon coming.
Marcus, some guests have said there's still an austere trend there, an austerity that's part of the culture. Are they following a theory that's in a textbook, like in London at LSE, Paul, BEG, B-E-G-G. The BEG is the one volume. It's like the ManQ or the one volume Econ 101 textbook. Are they following a textbook, Marcus Ashworth, or are they making it up just like the Fed, except with a cultural template of austerity?
They're busking it. They are making it up in the sense that they are desperately trying to stick to this shibboleth of, oh my word, inflation is too high and it's awful, and we must wait till absolutely every single inflation number is now at 2% or below. They're not far off that. Inflation's at 2.4 in Europe, 2.9 on the core, but it's going to be down to 2 very quickly. The ECB forecasts it to be at 2.2 in August. I think it'll be there next month. And down below 2% it will go, and it will stay below 2%. That's my fear, is actually not just disinflation, but potentially deflation. If you get a proper recession, which is right on the verge of in Europe, then I think it'll get ECB will lose control again.
The euro moving rather 107.13. We're about ready to get a 106 handle on euro. That would be germane into the press conference.
Parity.
Exactly. Marcus, talk to us about the UK. How's the economy over there, and what do you expect from the Bank of England?
Do I have to?
Yes.
Well,
Tom and I will come over there and stimulate that economy if that's what you need.
Stop. Marcus, this is important. I get up, folks, at like 1:30 and read 9 newspapers, and I finish with the British newspapers because they're the freshest. It's 6 a.m. Even Ashworth is up reading them. And, you read the FT and that. Marcus, I read the Telegraph. I want to slit my wrists. Is it that bad over in the UK?
No, it's not at all. And the newspapers are making far more out of it than there really is. It's fine here. In fact, if anything, there's a bit more growth in UK than there is in most of the rest of Europe. Things are fine. They're not brilliant. I think we'll have inflation much lower than 2% by the summer, probably down to 1.5 and lower. So the question is, will the Bank of England ever wake up and cut interest rates? Well, we might get one in June if we're lucky, but a bit like the ECB today, they're still in denial.
I see the old fire alarm is going off at Queen Victoria Street in London.
The flames are behind me.
I got that memo.
The fire alarm is there because Francine Lacroix is having a tantrum that they're out of Ely Espresso. That's why the fire alarm's going off.
Marcus, talk to us about Germany, because that's, as goes Germany, as goes a lot of the EU, is kind of how a lot of us over here in the States figure it. Their dependence on China, that type of thing. What's the latest on the German economy?
Well, I mean, they are in a very bad situation whereby their basic model of cheap Russian hydrocarbons is gone probably forever, and their main export markets to China and Russia as well are nowhere near as strong or non-existent now. So, we've got a real situation with electric vehicles where Das Auto has got a major competitive problem now, ironically, with China. They've sold them all the kit over the years to make the machines, and now they're those machines are being sold back to them. So it's really not great.
Right.
Look, Germany at one point has got a great fiscal balance. It's got a lot of resources. It'll be fine, but for the short term, it's pretty bleak.
Right. And Marcus, just to help you here, when there's a fire alarm at Queen Victoria Street, I know that you all gather at the Ned.
Yep.
And Sacconi's is the bar to gather at when you exit the building. Marcus Ashworth with a little fire alarm theater in London with good perspective on the ECB. We have. I mean, Lisa knows this better than me. She's our fire director, Bloomberg Surveillance fire warden.
Yep.
She's got the vest on.
I know.
It's Dior, but she's got the vest on. And, here, Lisa, we leave the building, and seriously, this is serious stuff. We walk over to Central Park, and there's like 3 benches, and like instead of a food court, we have peanuts to feed the pigeons and all that. At Queen Victoria Street, they go over to the Ned.
Oh, that is top-notch.
And they're at Sacconi's. Yep. I mean, not that Pharaoh and I have ever been to Sacconi's.
They love us
never,
over there.
But it's pretty good when they have a fire alarm in London. This is important, and I'm sorry, we're making jokes about it, but I got a euro 107.20.
Yep.
105 is where Jukes is modeling.
Right.
And others are modeling through parity.
I was going to say, are we going to get to parity? It's just extraordinary there. So again, you talk to these foreign exchange experts and you say, is there a bear case for the dollar? And it's tough to find one here. Even where rates are moving globally, it's tough to find a bear case.
On YouTube, the live chat, very smart today on yen. Gartman started up a firestorm here talking about 152, 153. Euro yen at 164. You need a stronger euro versus yen to make some drama there. That was great. Marcus, thank you. Kit Jukes, thank you. Got lots more coming up. We're on Apple CarPlay, also on Bloomberg Originals, Samsung TV, Apple TV, Fire TV. We're on fire.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Moments away from the producer price index for March and initial jobless claims for last week. Of course, this all comes a day after CPI came in hotter than expected. Let's get the numbers ahead of it right now. We have NASDAQ, Dow futures down about nearly 0.5%. S&P futures, they're down about 0.5% right now. The 2-year yield at 5%, that's little change, and the 10-year yield at 4.55%, and that is little change. The numbers are coming in. PPI final month to month looks like it's a tick lower than expected, Tom, and the year over year, same thing as well.
Watching the 2-year yield, Lisa Mateo, that's sort of the litmus paper of the system here. We were at 4.99. We come in at 4.96 now, seconds after this report. On the Bloomberg terminal screen, there are 6 lines on the PPI. Our two esteemed guests know there's like 25 lines really within the report, or even more than that. Final demand comes in a little light. Ex-food and energy on target. Food, energy, and trade on target. And the key one is year over year PPI final demand comes in a tick lighter, 2.2%, comes in at 2.1%. But Paul, that's up from 1.6%, waiting for a revision there as well. PPI, ex-food, energy, trade, the price of real estate in Greenwich, and Montreal Canadiens tickets comes in level at 2.8%, and claims are an afterthought here pretty much on target. I'm exhausted from that report. How many people turned off this station on YouTube?
Well, it's inflation. It's what's happening here, Tom. And looking at the yield space, the 2-year Treasury is off just about 1 basis point, 4.95% on your 2-year.
Out of demand for you, we're going to have two wonderful guests together for the next 30 minutes. Our economic data, it's brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving Commonwealth business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. We have two really important guests. And, when we put this together, Eric put this together, I'm like, yeah. That was before CPI yesterday.
Yep.
Ian Lyngen joins us now. Absolutely definitive, massive award-winning in the fixed income space. And lighting it up with me in Toronto a number of days ago, Francis Donald joins for Manulife for a half-hour discussion. We'll take a break so Lisa can give you the markets here midway. Let me start, Francis Donald, with you as well. If we have higher inflation, does that mean higher nominal GDP, or does inflation-adjusted GDP depress so much that we don't get an animal spirit lift?
Tom, once again, I think it's going to take me longer to figure out what that question is than answer it. Maybe what the heart of it is this all a system that is just operating as it should in a new economy that is operating at higher levels? Or are we overheating? Maybe that's how I'm going to interpret that question, because that's what is weighing on me. Are we overheating? And if we're overheating, then the risk of a more painful 2025, 2026 is larger. And that's what keeps me up at night is if we're overheating, and I think this does have elements of overheating and excesses, then it's all well and good to say the economy's added 303,000 jobs. There's demand in the system. We're not in deflation. But if we don't get rate cuts now, then my sense is 2025 and 2026 is going to be more painful. And we've said a lot of times, Tom, on this show and on other ones, you can't have your cake and eat it too. We were in a soft landing narrative, but one of two things was going to happen. Either we were going to be in a situation where the data was too good and rate cuts got pushed out and the market wouldn't like that, or the data was going to deteriorate and we were going to have recession concerns. That's exactly what's happening.
And what's so important here, after Francis threw me under the bus there with
Great
that
job.
question, I'm going to go right over to Ian and ask the same damn question. Maybe he'll throw me under the bus as well. Okay, we got all these moving parts. Everybody, all our listeners, our viewers on YouTube, their heads are spinning here, Ian Lyngen. And the bottom line is inflation's up. So we've got a set of outcomes that we can have. And one set is we get a more buoyant animal spirit, the overheating that Francis Donald was talking about, or we get a really diminished GDP. What do you see off these two inflation reports about what the animal spirit of America is going to be?
I think at this point, the biggest takeaway...
No, this is where you say, Tom, you don't know what you're talking about. Now continue.
Actually, let me rephrase that. Tom, that was a brilliant question.
There we go.
I think that Francis is right. You're going to have one of those two outcomes. You're either going to see things go a bit weaker as the net takeaway over the course of the next several quarters, or we're going to find ourselves in a situation where we realize that 5.5% as the upper bound for the Fed funds is not as restrictive as the Fed believed it was in 2023. What I worry about, however, is that if we continue to get inflation prints at these levels, the Fed is going to find itself backed into a corner where they need to cause a recession if they're going to hold that 2% inflation target.
So it's, Francis, I think from a past discussion, I got the sense that you guys are very more conservative than maybe the consensus on this economy. I took the recession talk off the table a year ago. Was that a little premature?
No, it would have been the right call because, yes, we do believe there is downward surprises for growth ahead, but they're not quite here yet. And this is what the Fed has to contend with. I'm with Ian on this one, is in the near term, inflation, we think, is going to continue to surprise to the upside, and the Fed won't be able to cut. They're going to lose the data support to cut in the near term. However, that increases the probability of a recession. And I remember members of my team back in December said, the Fed has pivoted early. This is going to provide indirect easing. We should lower our probability of recession calls for 2024. But now that we're back in an environment where we're losing those embedded rate cuts, we actually have to increase the chance of something bad happening here. I think the Fed is going to be in a situation with inflation data like this, PPI numbers, claims numbers, where they have to stay higher for longer, and they may have to stay higher until something breaks. That's the problem. Now, meanwhile, we're talking about PPI data, but yesterday we had the Bank of Canada. This morning we have the ECB. They're all saying we have the data to begin cutting. I think in the next couple of months, we might not be talking about recessions, but we'll be talking about how U.S. exceptionalism, which was once a good thing, is going to become more problematic for the Fed versus these other central banks and economies.
Right. Hey, Ian, I got the U.S. 10-year trading about 4.53%. Where's it going to be year-end, do you think?
I think there's a strong case to be made that we end 2024 with 10-year yields in a range of, let's call it, 375 to 395. The big question right now is how far do they back up until we start to get some dip buying interest.
For the traders worldwide that hang on every Ian Lyngen note, Francis Donald's taking notes up there with Manulife right now. You have published a lower 10-year yield call. And you've also said if you get a yield lift, load the boat. After yesterday, after today, you've got to be loving the acquisition of full faith and credit paper here, right?
I do think that we're right up against a range where it makes sense to really load the boat. Between that 465 and 475 level in 10s, I expect a fair amount of dip buying interest to come in. The caveat is that the 10-year auction yesterday needed a much bigger concession to be taken down, and I think that that was simply the investors stepping back, given how much volatility there was in the market at the moment.
Yeah, that's what it's just amazing. I try not to pay attention to those auctions. I'd rather pay somebody to do it for me. But I did note that they weren't necessarily as strong as maybe people would have liked. Francis, give us your sense here of how, well, let me ask you this. What is the data that you're going to be looking at over the next several days and weeks and kind of get a sense of what the Fed's going to be looking at? What are you going to be looking at?
We're looking at the job market. Because the focus has turned back towards inflation, which is not providing enough cover for cuts in the near term, probably not for June, although I'm already getting messages from my team here that the contributions from PPI that help us understand what PCE will look like are actually looking fairly light. So the Fed's PCE number might not be as severe as yesterday's CBI. But we're still worried about that labor market. Rehiring activity is down. Layoffs are up. People are not as confident about their job prospects. And some of these leading indicators inside job reports, even though we look at the headlines like full-time employment down year over year, these are all really problematic. Labor markets don't break in straight lines. They break in nonlinear fashion. So while the market is focused on some of these inflation dynamics, our eyes are going to be on when does labor really start to break? Because when it breaks, it won't matter whether you're a CEO, won't matter whether you were in the inflation higher for longer. The Fed will have to refocus towards the growth side of their mandate.
I got
be the game changer.
I got 30 seconds, Francis, and then we're going to come back with Ian Lyngen and Francis Donald. Francis, why isn't labor broken yet?
Because we're in a major structural shortage, and that is changing the way that labor markets operate. It's changing preferences around labor markets, and we had an incredibly overheated labor market, so the lag is still in place. But let's remember, Tom, the average time from the first rate hike to its impact on the economy is 2 years. We're not past that window. We're entering it.
Should finally, Francis, we got to come back with you, but should they have traded Jake Allen to the Devils? Did the Canadians do the right thing?
Oh, that's beyond my pay grade. I have to put that in my next Excel spreadsheet. But on balance, I would say, yes, that would have been the better call.
Probably better call. They got some draft, some young legs out of it. We're going to continue with Francis Donald in Montreal with Manulife. honored that Ian Lyngen is with us today in our studios. This is a real joy to have the two of them with us. Right now, red and green on the screen. The yields come in from 5% on the 2-year into I got to go to 4 digits for Ian, 4.9270. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. A sweeping Russian missile attack has destroyed Ukraine's largest power plant in the Kyiv region. It's the latest strike on Ukraine's energy infrastructure at a time when Ukraine is experiencing unusually warm weather. Bloomberg's Volodymyr Verbiani is in Kyiv.
One possible explanation for why the Russians are conducting these attacks now is to hinder the acceleration of air defense system supplies to Ukraine from its Western allies.
Bloomberg's Volodymyr Verbiani. Funerals are scheduled for this weekend for 2 of the 6 construction workers killed when Baltimore's Francis Scott Key Bridge collapsed on March 26th. The bodies of 3 workers remain buried in the wreckage. Meanwhile, Maryland Governor Wes Moore will be in Washington today to press lawmakers for funds to reopen the Port of Baltimore and rebuild the bridge. He says clearing the wreckage is a complex operation, but he's sticking with the timeline of reopening the port by the end of next month.
The ability that we've now been able to open up 2 channels that can now have up to a 14-foot depth, so you can get certain commercial vehicles. We've had 59 commercial transfers that have already taken place, and hopefully by the end of May, we'll have fully functioning operations for the port. Is a staggering accomplishment when you think about the speed and the coordination that was required in order to make that happen.
Maryland Governor Wes Moore says rebuilding the bridge will take a much longer timeline, but he says all options should be and are on the table for getting it funded. Moore was a guest on Bloomberg Surveillance. Round 1 of the Masters begins today at Augusta National. First round was scheduled to begin at 8 a.m., but the start has been delayed to at least 10:30 a.m. because of bad weather. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Francis Donald, Ian Lyngen with us. We will continue this important conversation in a moment. I got I got a wonderful, smart live chat question. We're going to go to Francis Donald on the character of American labor. Ian Lyngen on that arch call of under 4% 10-year yield. Sweeney will have to refi off that puppy. Bloomberg Surveillance, brought to you by Interactive Brokers, Bond Marketplace. Access their vast selection of over 1 million global fixed income securities, no markups or built-in spreads, and low transparent commissions. Learn more at ibkr.com/bonds. Go find our live chat. Some smart observations out there, even on Sanka. You go to YouTube, you search Bloomberg Podcast. There's a live chat. They've been talking about fishing all morning. Trout the size of your leg, as Ken Pruitt would say. Stay with us with Ian Lyngen, Francis Donald, red and green on the screen, Lagarde to speak. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. While we move from red on the screen to red and green on the screen, this is after some more inflation data. Producer Price Index rose month over month, year over year, less than expected. We had initial jobless claims for last week. That came in lower than expected. 211 applications were filed. And looking overseas, the ECB held interest rates steady. Right now, NASDAQ futures up about 0.1%. Dow futures little change, and S&P futures, they are little changed as well. The 2-year yield at 4.93%. That's down about 4 basis points. The 10-year yield at 4.53%, and that's down about 1 basis point. What's moving the markets? We have biotech company Rally Bio. They're up 100%. It announced a partnership with Johnson & Johnson that's going to help develop some therapies for a rare disease that affects fetuses and newborns. And drug maker Janux Therapeutics, they're up about 4%. Bloomberg reporting that it's looking into options, including a potential sale. And a quick look into the housing market. The cost to rent an apartment in Manhattan has fallen. Yes, you're not hearing things. That is true.
$12.
Rents unexpectedly dropped 1.8% year on year in March to a median of $4,100. That is your Bloomberg Business Flash. Tom and Paul.
I looked at Kansas City real estate yesterday.
Yes.
We had a wonderful guest from American Century Investments. You lead a different life out there.
You do. I'm telling you, we got to get off this island, Tom.
It's just. I got vet bill and kennel fee sleeping in the same room. It's terrible. What a joy to have Francis Donna with Manulife with us, and in studio Ian Lyngen here as well this morning. Francis, I'm out on live chat on YouTube. These guys are talking fishing in Texas and Wyoming. And every once in a while, somebody shows up with an adult observation. Stargate kills it this morning. And Francis, this is I can go to Francis because I got such confidence she can nail this. In the old days, Francis, teenagers got jobs. They were in a restaurant. They were lousy, and they got better. The model's broken from immigration. Now restaurants are hiring really serious, full-time, 40, 50, 60-hour week full-time people. I mean, the whole labor component of service has changed. It's a different America, isn't it?
Yeah, and 40% of Americans don't work, Tom. The employment to population ratio in the U.S. is about 60, and that's because we have the largest share of those over the age of 65 than the U.S. has had in modern economic history. And beyond that, yes, the immigration component is becoming increasingly relevant. And there are plenty of academic economists who are saying the extent of immigration is going to change the amount of jobs we have to create. You can actually just look north of the border to Canada to see just how powerful huge amounts of immigration, it's substantially larger in Canada, can distort your data. In Canada, for example, GDP is looking just fine, but GDP per capita has been declining since September of 2022. So there's a myriad of factors that are going in to change the composition of this labor market. And yet at the end of the day, Tom, if people don't have jobs, they aren't going out to restaurants, they aren't buying things, they aren't spending. And therefore, at the end of the day, no matter how dynamic the labor market is, if unemployment rises, it is bad. And so first principles still apply even as the economy is shifting.
Ian Lyngen, John Templeton once told me to my face, there'll be a shortage of bonds. We have a deficit. We have a debt. Do we have a shortage of bonds?
Our stance has always been, if you miss bonds at an auction, you don't have to worry about it because they will always make more, and they're always going to be making more. Now, there might be some scarcity in particular sectors at a given point, but what I think is really interesting is as we approach the election, there aren't any deficit hawks left in Washington, and everyone is worried about a next level of deficit spending ending up with more treasury bonds hitting the market. We're going to saturate what the bill market can handle, and we're going to need to see larger 10 and 30-year auctions. And I think that will be a big headwind for a constructive outlook on bonds.
Are you, or is the market concerned about deficits and things like that? I mean, I've been hearing about this my entire life, and I've seen the clock here in Manhattan my entire life about the debt in this country. Does the Treasury market care about it at all?
Well, to some extent, no. I would argue that 10 and 30-year yields are set off of global macro expectations of growth and inflation with some degree of a term premium priced in, depending on where we are in the cycle. I will make the observation that term premium and supply becomes far more important in a no landing or a Goldilocks economic outcome, because that means that the market has the bargaining power to demand higher rates.
Interesting. Francis, one of the issues out there is the consumer here. What's your view of the consumer? I mean, the consumer, by and large, if they want a job, they have a job. Wages are going up, I think, in excess of inflation. How do you view the consumer here?
It depends which consumer, Paul, because we're starting to see a pretty large bifurcation between low-income consumers and high-end consumers. High-end consumers are benefiting from higher rates, great stock markets, house prices. They still have excess savings, and therefore their confidence levels are very high. And yet low-income consumers are out of excess savings. They are seeing their job prospects weaken, and they are hampered by higher interest rates. This is why consumer credit card delinquencies are starting to rise. So there's this huge spread that's happening. It's the same spread that's happening between CEO confidence and small business confidence that have this largest spread that we've seen in the history of these two indicators being compared against each other. So right now we know that the top quintile, so the top 20% of U.S. consumers spend 35% of all the PCE. And what that means is the high-end consumer can probably carry the economy better than if we were relying on the low-end consumer. And that's why understanding these two separate groups and why the data doesn't say the same thing for each of them is going to be really important in the next 6 months.
Lagarde speaking in Frankfurt. I love this headline. This says all about our Bloomberg coverage. Lagarde repeats wording of ECB statement. Hopefully we'll get to Ian like that. Hopefully we'll get to Q&A here in a moment. Ian Lyngen, I've got to go back to this combination CPI PPI report. Francis is going to brilliantly lay out how it gets to what Powell cares about: PCE, trim Dallas, fancy Cleveland, the other inflation indices. Does this CPI PPI combo change how you write your note? Have you made a fundamental shift in your inflation belief after the last 48 hours?
So I think that the takeaway from the inflation updates has been that we thought January and to some extent February were one-off reports. There was some seasonality, but the reality is inflation looks a lot stickier than we thought it was going to be at this point. And I think the more interesting question is, has the Fed's reaction function to realize inflation changed? Are they going to need to now signal that we have only 50 basis points or even 25 basis points worth of rate cuts when we get the updated dot plot in June? I would say that the short answer is yes, we are looking at fewer rate cuts this year, but the way that the Fed approaches inflation hasn't changed. The biggest risk is if they ever revisit the 2% inflation target, and we just don't see that happening.
Ian, thank you so much. Great experiment. Francis Donald, we'll get the two of you back together again. Maybe we can get you both in the office here in Montreal. Francis Donald with Manulife, Ian Lyngen with us here this morning as well. Paul, out on live chat, they're on fire today, knowing you. And this is the heart of the surveillance email. This is where I get the hate mail. Lisa gets the love notes. I get the hate mail. No offense, but you guys are so out of touch in regards to the actual health of the economy. The normal American is struggling, and they go on to talk about the struggle. I'm sorry, but we're having a financial discussion with Francis Donald and Ian Lyngen, and the reality, Paul, there's a whole hunk of America going out going, wait a minute, we're not participating in this.
Yeah, exactly right. And that's kind of why I try to get a sense. I pay attention when the retailers report earnings, Tom, get a sense of how the consumer's doing out there in terms of retail sales and things like that. But you're right. And we've seen that for such a long time in this country, and it seems like that divide continues to get wider and wider.
Ian Lyngen, how many times have you seen Caddyshack? Be honest, come on.
How many times a year? Definitely half a dozen times.
Half a dozen times, if not more. Okay. I mean, the yacht scene, we're going to do the yacht scene later. The yacht scene is my favorite, where they launch the new boat. Any number of jewels from Caddyshack as we go to the Bloomberg coverage, the headlines on the Masters starting. Rain delayed this morning. Journey, any way you want it. It's in there somewhere.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Green on the screen must mean Gina Martin Adams walked into the studio. A lift to the market here off the carnage yesterday. The carnage, I say. It was a maximum drawdown yesterday.
Oh, my goodness. I mean, on that inflation data, I would not have been surprised if this market traded off 2 or 3%.
Exactly, and it didn't.
Nothing.
There was a bid to the market,
Yep.
and it came in the afternoon with a bid to the market.
idea how
I don't
this
know what to make
stock
of it.
market thing works.
Futures up 7 because of Martin Adams. The VIX was, 25 yesterday? I'm
Right.
kidding. It was up 16, 17, 15.89. Now we move on from CPI, legit inflation, PPI, a whisper that. Can we say thank you to Ian Lyngen for Francis Donald? They got
Yeah, that
along.
was smart.
They played well
Yep.
together.
Yep, very
It was good. It was good conversation. We're going to really get back to something prosaic, like what do we do in the stock market? We're going to do that here in a moment. The conversation's so important, we're going to get right to it. I'm looking at dollar yen off of Gartman and Kit Jukes earlier. Dollar yen rounded up 153. That's key if it breaks through to a weaker yen, 155, 156. Euro yen not giving me much love because Lagarde's over there causing a weaker euro. She's in the middle of her press conference right now. She's saying the economy remained weak in the first quarter. You think? Okay.
That's what Marcus Ashworth told us, the same thing.
Yeah, well, yeah.
And I think maybe more colorful language.
Yeah, probably in more entertaining language as well. But the Christine Lagarde's got some responsibilities there, to say the least. We're on Apple CarPlay, Android CarPlay, out of Google Play. The Bloomberg Business app is the way to get us at Apple. And YouTube, we are just thunderstruck by the build in YouTube. Bloomberg Podcasts. You go in and you search. Where do I search? You search for Bloomberg Podcasts, and there's a picture there of Lisa Mateo. That's how you know to
just click on it.
You know, I mean, we go for it. I mean, they click on Lisa Mateo. That's what they do. The Bloomberg Business Flash.
You
Lisa
got
Mateo.
it. Yes, futures. We've got green on the screen after the latest inflation reading. Kind of trailed estimates right now. We have NASDAQ futures. They're up about 0.2%. S&P futures up about 0.1%. Dow futures, they're a little changed right now. The 2-year yield at 4.93%. That's down about 4 basis points. The 10-year yield at 4.53, and that's down about 1 basis point. To commodities we go. We'll check in with spot gold higher at $2,339 an ounce, and over to oil Brent crude at $90 a barrel. Companies making news. U.S. Steel, they're down nearly 0.5%. Sources saying Nippon Steel's $14 billion takeover bid for the company, well, it's received an extended antitrust review. And then you have Amazon up about 0.5%. A letter to shareholders. CEO Andy Jassy saying his company's cloud infrastructure, well, that's going to become a part of an essential part of its generative AI boom. And then speaking of AI, we'll go to Alphabet. They're up about 0.5%. The stock actually heading back toward what would be a record $2 trillion market value. Investors, they're just optimistic about its AI strategy. That is your Bloomberg Business Flash, Tom and Paul.
You know, I mean, steak dinner last night. Gina Martin Adams was there, but the steak dinner. I guess Bezos showed up.
Yeah.
And I don't think Josie and Bezos are getting enough cred. They're in the middle of a pandemic. You build out Amazon because
Sure.
it's almost a duty.
Yes.
It's a social duty, right? Am
Yeah,
I wrong?
no, absolutely.
And so they crater with the end of the pandemic. Stock goes 185 down to 90. And Gina Martin Adams writes a memo with her technology team. I'm sorry, it's Amazon. Get over it. Paul, it's a double off the gloom that Bloomberg Intelligence was writing against. Why? I mean, the only one that gets more packages than me is Gina Martin Adams. They stack up at the door. Why don't you bring her in?
Gina Martin Adams joins us, Chief Equity Strategist for Bloomberg Intelligence here in our Bloomberg Interactive Broker Studio. Gina, again, I saw that inflation print yesterday, and I said, I wouldn't be surprised if this market over the next couple of days trades off 2%, 3%, 4%. Mm-hmm. Nothing. What's that tell you?
Well, I think it's early yet. The inflation indicators that actually matter much more for stocks historically are PPI and CPI and import prices.
Okay.
So yesterday you got CPI, which really matters a lot to the bond market.
Okay.
Sends signals to the Fed, tends to impact valuations. But if you look at what really impacts earnings trends, it tends to be producer prices and import prices.
Okay.
So today's inflation number, tomorrow's inflation number should make a bigger difference longer term to the margin outlook for companies. And I think that they're more important to watch in general. I do think that, to your point, though, we did come into the second quarter set up for a choppier period for stocks. And we should expect a choppier period in the second quarter, just considering the signals we got out of the technicals. Momentum did not confirm the price advance, for example. Correlations are at multi-year lows in the S&P 500. So we're due for a choppier period, for sure. But from a broader perspective, every support for the bull market is generally still intact. The earnings numbers are still improving materially. Analysts are still far too pessimistic about the earnings outlook in our view. Also, the macro indicators are starting to support stocks. ISM popped above 50 for the first time in a year and a half.
Yeah, exactly. How about earnings? I mean, we've been so focused on the Fed, so focused on the ECO function on the Bloomberg terminal, the economic data points. But tomorrow we start getting some real earnings from some real companies led by Jamie Dimon and some of the other bigger banks. What are you looking for?
Yeah, I think earnings season will be really interesting. First and foremost, I think analysts are still too pessimistic, even with the company guidance, which only covers about 25% of stocks and has been moderately negative. Even including that in our model, we're modeling for at least 6% growth, and analysts are thinking 4%.
Okay.
So analysts are still too pessimistic. Remember, coming into the fourth quarter earnings season, they were thinking 2%. Yeah. We got 8%.
Okay.
So we could be even too light on our overall estimate.
I've got 3 stocks, 12-month trailing: Amazon, Apple, ginormous Apple number, Microsoft, double Amazon. Their free cash flow.
Yeah.
$0.2 trillion, 12 months trailing. $200 billion. Do the people listening, do the people watching understand the scope and scale
just how huge they are
of their ability to generate cash?
Yeah, probably not. And one of the other things we're looking for coming into first quarter earnings season is a wave of buybacks to reemerge on the S&P 500 as well. Consider over the last year and a half, we've been in something of a buyback dearth as a result of the cash flow contraction that we had that started in 2022. We probably start to see buybacks recover materially, reflecting that cash flow gain. I think with respect to tech at large, the one thing that tech has working against it, and this is just going to be a potential headwind throughout this year, is the market cap share of these stocks when you look at TMT as a whole theme. The market cap share is close to 40% of the index right now. Their earnings share is still only at 30%. That gap suggests that the stock market is already anticipating that their earnings share continues to accelerate very, very rapidly. They're going to have to meet earnings numbers and probably exceed earnings numbers materially, but that's the only real risk in the earnings season.
Same with luxury good. Andrea Felstad over in London talking that. Rich is out on live chat, and he's screaming out on live chat, did you know there's bank earnings tomorrow? We've got all these other discussions.
Yeah, I know.
The big 4 banks. What's the Bloomberg? You know, I mean, she's not on speaking terms with the banking team, but what do they say?
Yeah, the banking team and I. We actually had a call yesterday, a webinar with clients where we reviewed the sector earnings outlooks. Financials is kind of a meh. I hate, that's the best word that I can use to describe it, is expectations are very low. They're probably going to beat those expectations, but they're still not experiencing an acceleration in revenue growth to a degree that you would need to see to get really super optimistic about this space. That said, valuations are still very discounted relative to much of the rest of the index, and they are experiencing relatively strong earnings revision momentum. So they're kind of in the middle, maybe eking their way toward the top of our sector rotation model, but they're not one of the most exciting sectors to watch. I think you want to watch tech for potential misses and or enormous beats. And on the other end of the spectrum, you watch the commodity-sensitive sectors, energy, materials, and industrials, where there's a lot of activity in the economy and a lot of movement in prices, but we're not yet seeing it show up in earnings trends.
All right, so just confirming, Rich, I can talk now? Good, okay. All right, so Rich, he loves you. Whenever you speak, he says, don't say anything, because he wants to listen.
Thanks, Rich.
Rich wants to listen.
We're
all right, so
buddies.
what other sectors here, if banking doesn't get you, or financials don't get you that excited here, staying with the tech, where else do we go here?
Yeah, healthcare is a really interesting space right now. Nobody's talking about healthcare.
Well, Sam Fazeli's talking about healthcare, but we tend not to listen to
healthcare is really interesting because it's been through such a tremendous disruption. Over the course of the last year, healthcare earnings have fallen very, very quickly. They're expected to continue to fall in the first quarter. We're finally starting to see stabilization in analyst revision momentum, and the space on a relative valuation basis looks extremely discounted. So it stands out relative to most of our other sectors. Now, I know nobody wants to talk about it because it's not tech and it's not energy and it's not financials and it's just healthcare. But nonetheless, it also offers some degree of shelter from that second quarter volatility that we're anticipating. If the market does move into a choppier phase, this is a more defensively trading sector that has a pretty good foundation for growth.
This is really important, folks, because I'm when Gina hates me for this, because I'll just always go where the news is to create ratings. That's the beast that we are. You're 100% correct, except UNH is the definitive, has not done anything for conversation 2.5, 3 years. Are they going to get back on track with single-digit revenue growth or double-digit revenue growth, which is their heritage?
We should see recovery in the healthcare sector revenue growth at large because we're starting to see broader cash flow recovery for companies, and we're starting to see a generalized
government pushing against that? Whoever wins the election, is government going to push against that? So it's a new UNH, more strident, more austere.
I think that's a huge potential headwind to the sector, and we do want to consider that. But I also think that that's largely embedded in valuations right now. The political risk is pretty firmly embedded in valuations. It really does become a matter of whether or not they can produce earnings gains. In addition to the top line revenue growth gains that I think we should see as we see recovery emerge over the year, I also think the single most important thing for healthcare is, frankly, productivity and cost cutting. And this is where AI and some of the advancements in technology come in.
How do you cost cut? I mean, I'm on Fifth Avenue, folks, watching the courage of Mount Sinai with COVID. They're all coming out to watch the eclipse and that. How do they survive?
There's huge potential for productivity gains in healthcare because it's still a paper-intensive industry. Think about how your doctor operates with a clipboard and a pen and paper. There's tons of opportunity for acceleration in technology, embedding technological advancements in healthcare to just drive productivity gains.
Michael Barr says, thank you for wearing Detroit Tigers colors today. With our news in New York City, Michael Barr.
Thank you very much, Paul, Tom, and Lisa. Maryland Governor Wes Moore said all options, including private partnership and capital markets, are under consideration to finance the rebuild of the collapsed Francis Scott Key Bridge in Baltimore if the federal government is unable to cover the costs. Moore spoke today on Bloomberg Surveillance.
We know it's important to use every single lever at our disposal, and that every sector, private sector, public sector, philanthropy, have all got to be involved and at the table in order for us to get to our long-term conclusions.
Governor Moore says Maryland is on track to clear the Baltimore Channel and restore full service at the crucial East Coast port by the end of May. House Republicans have failed to advance a bill that would renew the Foreign Intelligence Surveillance Act, known as FISA. The law gives law enforcement the authority to monitor suspicious interactions with foreign adversaries. And round one of the Masters begins today at Augusta National. The first round that was supposed to start at 8 a.m. It got delayed to at least 10:38 because of bad weather. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much, Paul. Greg Villiers publishing moments ago, I believe he's traveling, and he said inflation, a major albatross for Joe Biden.
Yep.
There's
I mean,
you
kind of thought you had it whipped, but maybe it's coming back a little bit. We're trying to get some more data points there.
We will see green on the screen. Gina Martin Adams, thank you for entering the studio. The market always goes up with her appearance. Futures up 13. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures seeing a little bit of a lift after the producer price index increased by the most in 11 months while still trailing estimates. Now, this comes a day after the consumer price index came in hotter than expected. Right now, initial jobless claims also for last week that came in lower than expected. And looking overseas, the ECB, well, they held interest rates steady, and that actually has a euro wavering this morning. We'll go over to NASDAQ futures up about 0.5%, S&P futures up about 0.2%, Dow futures up about 0.1%. The 2-year yield at 4.92%, that's down about 5 basis points. A 10-year yield at 4.51%, and that's down about 3 basis points. To earnings we go. CarMax, they're taking a hit. They're down 8%. Reported net sales, operating revenue for the fourth quarter missed estimates. Profit also lagged on top of that, and that's pulling some of its rivals down a little bit too. We have AutoNation down 2%. Group 1 is down 1%. And finally, Corona beer maker Constellation Brands are up 0.5%. Fourth quarter sales beat estimates. That was, yes, thanks to beer sales. But wine and spirits revenues, well, they stayed a little bit weak. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much. Greatly appreciate that, Lisa Mateo. Major shout out, Ian Lyngen and Francis Donald. It was a great conversation on economics and fixed income. Paul, Lingen's call of sub 4% yield. Steve Major at HSBC with the same tone. I mean, it's not that that's a leap of faith, but this, that, and the other thing that has to get there to get the yield to drive that far, like solid 50?
Exactly.
60 basis points?
Exactly, Tom. We got the 10-year Treasury at 4.51%, so it'll be nice year-end. Mr. Lyngen calling for sub 4% here. Let's talk about this equity market. Again, we're kind of got green on the screen here, and I have to be honest, I'm pretty surprised given the inflation talk we've had and what it means for the Federal Reserve. Technology still leading the way. NASDAQ is leading the way up 0.3% today. Sofia Jablonski joins us here. She's the CEO and CIO of Defiance ETFs, joining us live here in our Bloomberg Interactive Broker Studio. Sofia, what did you make of the inflation data that we got yesterday and today, and maybe what it means for the Federal Reserve?
Yeah, good morning, and thanks for having me here today. Well, you know, a CPI was hotter than expected, and the market obviously reacted to that very quickly. The whole kind of wrench in the market rally for this year comes down to whether or not we think that the Fed will cut as many times as the market expects. So today's number was a little bit better, which is reassuring, kind of sets us up for potentially a decent PCE read, which we know is the Fed's favored read. But, it's hard to, I think we have 3 more CPIs and about two more PCs before the next rate decision. So, if they don't get the data, if it's not in line, we might not get that cut in June.
You are hardcore ETF. There is percolating into the summer of 2024 the ultimate victory where the world of ETFs like Defiance will crush traditional mutual funds. Are we there?
We're definitely getting there. Mutual funds had decades before ETFs came into play, so it'll take some time to just take over. But I think you're just hard pressed to get the next generations of investors into mutual funds versus ETFs. They're cost efficient, they're transparent, they're cheap, and you can trade them all day long. That's what people like about
What's the downside of an ETF? It's just too good to be true. I mean, I was at one of the original Barclays ETF meetings. I think it was after Lincoln. I think Harrison was president or something. I can't remember. But the answer is, what funds have to have some advantage. Yeah. What's the disadvantage of your world of ETFs?
I mean, there's no disadvantage in terms of the structure of the product itself.
Too much trading?
There's so much liquidity. The spreads are tight. There's no issue. The issues come down to specific issuers or specific funds. You have ETFs that track unique parts of the market, like Bitcoin or something.
Are you doing Bitcoin?
We don't have a Bitcoin. We're very much like AI, quantum, machine learning.
Why did you not do a Bitcoin fund?
Because we're just, there were like 13 people that filed for them. We're a small startup. We just, you have to be smart and make reasonable business decisions. Like, we just weren't going to be BlackRock.
So I know, again, you mentioned AI, machine learning, quantum computing. AI, I guess, is a thing. Everybody's telling me it's a thing. It's a thing. Okay. Yeah. So if it's a thing, do I just buy NVIDIA, or what else? How else do I get exposure to this thing?
Yeah, so I'm not going to sort of like preach that it's a bad idea to buy only NVIDIA, because NVIDIA has just absolutely crushed it, right? But you do have single stock concentration risk in NVIDIA, which, falls a little bit, doesn't matter if you've been in it for a long time. I think ETFs work really well with AI and with things like quantum computing and supercomputing, because there is more than NVIDIA. There's NVIDIA, there's Taiwan Semiconductor, there's Rigetti Computers, there's IonQ. There are all of these stocks that are involved in this actual, evolution of technology and AI as it is. And I think it's worth having exposure to all of that stuff.
All right, so again, the way we're all kind of learning about this AI thing is, I guess, chips is definitely a way to play it.
Yes.
Okay, and you can go beyond NVIDIA, as you mentioned.
Yes.
Is there a software play? Is there a hardware play? How else do you think this is going to manifest itself? Because everybody's talking about this surge in CapEx, tech CapEx. It's going to be incremental CapEx. Where's it going?
It's going everywhere. So if you think about where NVIDIA and AMD are selling their chips to, two of the biggest, buyers of that are like these huge internet companies and e-commerce companies. Meta's buying them, Amazon is buying them, Microsoft is buying them. So AI means expansion of cloud. It means expansion of data center. It means expansion of cybersecurity needs, like the, Palo Altos of the world and things like this. And also, nobody's talking enough about processing this data quickly enough. In order to do that, you need supercomputers. You need companies like the sleepy old IBM, which is actually the coolest quantum computing company right now that everybody's ignoring.
Quantum computing. Define that for me.
Yeah, so a normal computer can essentially operate in a binary state, right? Heads or tails. A quantum computer can do both of those things at once, predict different probabilities at the same time. So it's essentially more precise, lower latency with different outcomes and probabilities at the same time.
Yeah, so like a junior in high school has all the answers. It's the same thing.
Exactly.
Yeah, totally.
So you've got a cruise line ETF. You got a hydrogen ETF. Yes. I think it's really cool specialization. Yeah. How do you respond to a competitor like ARC, hugely notorious? If you look at the 3-year track record, and I've spoken to Kathy Wood about this in a heated and informative interview in London.
Yes.
I mean, she's getting all this notoriety, and I'm looking at the track record, and I'm going, this doesn't work. Do your ETFs, are they only cyclical where they work for a certain cycle? Or could you actually buy them in a retirement plan?
Yeah, so it's a great point, and we're super transparent about this. So quantum computing, the quantum ETF and the 5G ETF are about connective technologies. There are names in those funds like Microsoft, Amazon, NVIDIA, AMD. You can hold those forever, I would argue, right? We have income funds as well, where we sell, puts to generate income on the S&P 500 and NASDAQ. You can hold those forever. You can hold those in a retirement account. Hydrogen for us is something that's futuristic. We think that a decade from now, hydrogen could be an interesting alternative energy source. We may be wrong, we may be right, and we're very clear about this might not play out for a really long time.
Are you talking like Lawrence Livermore Lab fusion, hydrogen fusion?
No, we're talking about hydrogen, fuel cell powered vehicles, hydrogen powered vehicles. Like in Japan, they run their buses on fuel cell technology. It's not like so out there. It's just not taking over.
I got to go to stock strategy here. What do you think, Sylvia? What do you think is Tesla?
So I would equate that as like in the world of hydrogen EV, right? That's the future of greener vehicles, greener transportation, AI, the world kind of moving from gasoline towards that. But I fully acknowledge that this is a really small part of the market right now. It's about 8%. We have a long way to go before that stock pays off, but a lot of people are willing to take a small percentage of their portfolios and put them into these innovative, futuristic possibilities.
Can you come back?
Yeah, I'll let you on the street anytime you want.
No, I just think there's so much macro babble about ETFs.
Yeah.
And like I said to Kathy Wood, I said, I'm looking at Morningstar and it's not pretty. Period. It's like people are losing money.
Yeah, you have to have performance. I agree with you. You can't kind of hang your head on something that's not doing anything.
She's got to come back. I mean, the way you travel, Lisa, help me out here. Sweeney, dominant retirement sector, the cruise ETF.
Yes, I'm all over that.
You can just see it. Do you do you test the cruise ships?
Do I test them?
Do you go out there and test the cruise ships?
You know what? Just given the performance of cruises, Norwegian, Carnival, and whatnot, the world loves them, not me.
Sylvia Jablonski, thank you so much.
I'm with you.
It is Rich. Rich is on cruises 3 times a year. Good morning. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo, alongside Tom Keene and Paul Sweeney with your opening bell report. So how will the markets react? Yeah, we've got some more inflation data, and producer prices increased in March from a year earlier by the most in 11 months. But it also shows some relief in some key categories like healthcare and portfolio management. So as we get things started, let's see how things shape up. The S&P right now up about 0.2%. We have Dow up about 0.1%. The Nasdaq is up about 0.3%. Over to the bond market, we have the 2-year yield at 4.93%. That's down about 4 basis points. The 10-year yield at 4.52%, and that's down about 2 basis points. Heading over to commodities, we have spot gold higher at $2,343 an ounce, COMEX gold at $2,360 an ounce, and as far as oil is concerned, we have Brent crude at $90 a barrel, NYMEX crude at $85 a barrel. I want to point out Bitcoin, it's up about 1% at $70,628. That is your Bloomberg opening bell report. Tom and Paul.
Thanks so much, Lisa. Really interesting to see where we are an hour from now. Program note, I mean, the Masters is going on. We got a rain out. We're going to give you some radio updates across YouTube, across Apple CarPlay here on the Masters. Looking forward to that. Paul, are you flying out to Frozen 4? Is that where you're going? You just don't want to admit it? You're going out to St. Paul?
Going down to Durham, North Carolina. I'm going to see the Friends of Duke, get some Bullock's barbecue for dinner tonight, get some Carolina pulled pork, and that's how we roll down there.
Surveillance correction. I said rain out, and it sounds like a baseball game where you get a ticket for the doubleheader. Rain delay is what it is. Frozen 4, Boston College, Michigan tonight. This afternoon, Denver, BU. So you may get a bean pot Frozen 4.
I'm good with that.
Anyone's sentimental. I mean, all 4 teams are like phenomenal and incredible heritage. But to see a Boston College BU championship game would be just for people that know hockey back 5-6 decades, a huge deal.
It's great.
Like the bean pot.
For the New England folks, that'd be huge. Boston.
Yeah, and then of course our team, it's amazing. We had 2 of our team members, they actually matriculated from Boston University.
Who could that be?
I don't know. You know, they know every bar up Com Ave and Beacon Street. They know Foley's. I mean, the amount of time Sparta spent in Foley's, you can't even calculate the number of Narragansetts that were consumed, were quaffed there. We're going to look at the euro right now, and if you look at euro, nothing happened. 107.47 on euro. Simon French knows better. Chief economist, head of research at Panmure. How did Lagarde change the debate today, Simon French? Did she articulate an ECB future?
Morning, Tom. Morning, Paul. No, she didn't. I think the FX market response that you alluded to in your intro is absolutely spot on. There was a new sentence in there saying, with about 4 clauses in the sentence, lots of conditional statements. If things evolve as we expect, then there may be a case for perhaps cutting interest rates. I'm paraphrasing, but in effect, nothing that the market didn't anticipate, nothing really in the statement that you could really hang your hat on. What I felt was fascinating is that when I stopped watching the press conference, 4 questions in, all of them about the US economy, to the governor of the ECB Governing Council.
Well, is Chairman Powell the president of the ECB? Is that what you're saying?
Isn't it staggering that you have a $15 trillion economy, that all the journalists in the room, and I have to say in my note to clients this morning, all the other major developed central banks are dancing to Jay Powell's tune and the data coming out of the United States because they don't want a big FX move to generate imported inflation.
And this is what you're going to see from Bloomberg Surveillance. We're going to be doing more FX here because of just what Simon French said.
Exactly
it's the litmus paper of the system. Yen 153. Everything changes. 2 big figures higher, 155.
Simon, we had Marcus Ashworth on Bloomberg Opinion columnist earlier, and he was just flat out saying, you know, the ECB is way behind here. They need to start cutting rates now. The economies across the European Union need it now. Does the market kind of feel the same way?
Well, I think Marcus, look, he's produces some great copy. I think he's certainly right when you're looking at the economic data coming out of Germany, of course, the Eurozone's biggest economy. But if you put together a basket of, as I do, about a dozen cyclical indicators across the whole Eurozone, actually Germany stands out as a big laggard, but actually the remaining economic areas have seen, consistent with global economic trends, global PMIs, actually a pickup in economic momentum in Q1. So I'm not sure the ECB at an aggregate level is behind the curve, but actually for the purposes of the biggest economy and the one we focus on, Germany, certainly they could do with looser financial conditions and a bit of a policy move from the ECB to help them along.
So just give us a sense over here, Simon, just kind of the proportion of Germany for the ECB. How important is it? Because, as you mentioned, they have some issues that are pretty specific to them in terms of the source of their energy policy, as well as their big trading partner in China.
Yes, so I think those are two key structural elements of the German economy, which is about 25% of Eurozone GDP. Wow. But it's also the fact that I think ideologically, the German economic community, led out of the Bundesbank, are in a really difficult place because they have traditionally been the most hawkish on inflation, and they've been comfortable being hawkish because actually for most of the existence of the Eurozone, now into its third decade, Germany has been the strongest performing economy. Actually being at the bottom of the league table and also being hawkish on inflation, it's a really difficult place, if you like, ideologically for the thinkers in German economics at the moment.
You know, Simon French, a really difficult place is Tottenham. I don't know what they're doing here at the end of the Premier League this year. I said this earlier, Simon French, I look at the Telegraph and I might as well slit my wrists over the future of the United Kingdom. Do you share the post-Brexit gloom on your United Kingdom like I'm reading?
Please don't. Please don't, Tom. Look, the Telegraph have an editorial
I love getting
line.
Going.
You've done it. You've done it. You've really prodded me there, Tom. Look, has it been a self-inflicted asymmetric wound, Brexit? Yes. But does it colour every single economic upside associated to the United Kingdom? Right. Clearly not. So, look, there is no place, is there really, in, well, maybe there is on Bloomberg, but in most modern journalism, there's no place for nuance. I would say we've got particular frictions to trade that are a barrier to trend growth, but actually demographics pretty favourable, household balance sheets pretty favourable, an election where the choice is between two moderates. Actually, that's the envy of quite a number of European and potentially the US electorates this year. So actually, it's not all doom and gloom, but there's perhaps far fewer clicks in giving that message out.
There we go. Simon French, I wanted to get him riled up. Thank you, with Panmure Gordon, writing often for the FT and other worthies in the United Kingdom. Simon French, Panmure Gordon. Red and green on the screen right now. The Dow trading fractionally lower. Dollar fractionally weaker. Yen right now 152.98. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. Maryland Governor Wes Moore will be in Washington today to press lawmakers for funds to reopen the Port of Baltimore and rebuild the collapsed Francis Scott Key Bridge. He says it's imperative that federal funding get done.
A huge chunk of the American economy relies on the Port of Baltimore. And so I'm thankful that the president has led and rightfully acknowledged that what happened last week was not just a human catastrophe. I mean, we lost 6 Marylanders during this catastrophe. And it was not just an economic catastrophe for Maryland or for the region. This was an economic catastrophe for the country.
Maryland Governor Wes Moore says he can't give a total cost for restoring the port, but he says all options should be on the table, including private sector and philanthropic funds. Moore was a guest today on Bloomberg Surveillance. The largest power plant in the region surrounding the Ukrainian capital was destroyed in a Russian missile attack. 6 missiles hit the plant south of Kyiv this morning. The attack set the facility ablaze. Bloomberg's Volodymyr Verbiani is in Kyiv with more.
This plant, which, as I said, was completely destroyed, according to the company's executive, is under fire, and firemen are trying to extinguish the fire. And only after that, it will be clear how heavily it was damaged. and whether it is possible to resume any operations there.
Bloomberg's Volodymyr Verbiani in Kyiv. Over the past month, Russia intensified strikes on Ukraine's power infrastructure as Kyiv struggles with a shortage of ammunition and manpower. Finally, the Masters is about to start this morning. Round one was pushed back to begin at 10:30 because of bad weather. Tiger Woods is now scheduled to tee off at just before 4 p.m. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. We're going to take some time here. A lot of people, Michael Nathanson publishing on Disney, Comcast, Rich Greenfield just out with a note. Lucas Shaw is with Bloomberg. He is a jewel. He is a genuinely knowledgeable person about the legitimate pulse of Los Angeles and Hollywood. He has a tweet out right now. And I'm going to go to Paul Sweeney, who's just experts lived this. It's always a good sign when 4 of a company's board members resign during merger negotiations. What in God's name is going on at CBS?
I have no idea. I think what's happening there, and again, it's now Paramount, symbol ticker's now PARA, Paramount / Viacom / CBS. The controlling shareholder there, Sherry Redstone, she has recently, in the last several months, decided that she is willing to sell her control stake in the company. This is something that they've owned for decades. And that's kind of opened it up to a little bit of a discussion about who wants to own some or all of Paramount. And here's the problem. Not a lot of people want to own any of it. So there's
any of it. Then they don't have a theme park.
If she had made this announcement 5 years ago, this would have been front page just news, because you would have had every major, I think, media company and maybe even some technology companies taking a look at the company. Now you're left with really no interest in the entire company, and but just some control. People looking for the control.
I don't want to, if you're not briefed on this, but Paul, is it just as simple as this traditional Class A, Class B share structure, and the fact of the matter, she's driving the cart?
Right, and so one of the issues, if you're a shareholder of you're not Sherry Redstone, and let's say you're Gabelli Funds, who owns a big part of Paramount, you want to get the same economic treatment that Sherry Redstone gets for her control stock.
Are they going to get thrown? Is Mario Gabelli going to get thrown under the Paramount tour bus?
I don't think anyone's going to do that to Mario Gabelli, but that's kind of one of the key issues here. A, who wants it?
Right.
B, how much do they want to pay for it, and what do you do with the other shareholders that are not control shareholders?
And is there going to be a limited group of people? Because if you take in CBS and you've already got CBS-like properties, the government's going to
some
go,
regulatory issues. So it limits who can buy it. Comcast, for example, would not be a logical buyer because they own the NBC television network. Couldn't own this. So it really limits the number of buyers. And at the end of the day, what you're buying are linear broadcast networks, linear cable networks, and all of which are in secular decline.
Nathanson, linear to me, folks, is old fart. It's like what Michael Barr and I have.
Yeah.
Michael, you and I, we got the Zenith black and white with the antennas.
You got antennas?
Yeah, I got the antenna thing going. It's great. I mean, I can make them go, and it depends on where the helicopters are over Central Park. I got to justify them sometime. But the bottom line is it's a hugely restricted set of potential buyers.
Right, exactly right. And we saw this great note out of MoffettNathanson that you were referencing.
Yeah.
They published today, basically saying, hey, when you look at the Walt Disney Company, when you look at Comcast, 2 huge media companies, a big part of what you're buying is the theme park business.
The reason I bring this up is for Lisa Mateo, Michael Barr, Paul Sweeney, and myself. We're out on YouTube.
Yeah.
You search Bloomberg Podcasts. There's Lisa Mateo's all you got to look for. I mean, that's a constructive thing. And so you click on, the Bloomberg Surveillance Podcast, 7 to 10 a.m. We are working on a follow-on recording to come out. I don't know. That'll be today, tomorrow, when the Masters finally plays. I don't know. But we know that our linear future is YouTube, and we thank you for watching. The live chat's been really lively today. Red and green on the screen, the VIX 16.10. Bloomberg Surveillance from New York City.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have a little bit of a lift to the market, but right now the Dow down about 0.1%, the Nasdaq up 0.3%, S&P 500 right now is little change. And that's a little bit of relief to investors. This is after the latest inflation reading trailed estimates because yesterday they're just getting over that hotter than expected CPI report. We'll head over to the bond market right now. The 2-year yield at 4.93%. That's down about 3 basis points. The 10-year yield at 4.53%. And that is little change right now. To currencies we go. The dollar is weaker, Japanese yen stronger, euro is weaker, and that's after the ECB held interest rates steady. We have the British pound stronger. Bitcoin is at 69,866. I want to check in with Alphabet right now. They're up nearly 1%. And the stock is heading back toward what would be a record $2 trillion market value. Investors optimistic about its AI strategy, all about AI. And then I want to check in with Boeing. They're down about 1% right now. The company reporting in a filing its CEO, other top executives took personal trips worth more than $500,000 on the company's private jets that were recorded as business travel. That was a result of a Wall Street Journal investigation last year. That is your Bloomberg Business Flash. Tom and Paul.
And when Jason Kelly walks into the studio, we got to go meme stocks. I mean, that's what you do. 33.51 on DJT. Paul, I'm going to editorialize 1, 2, 3, 4, 5, 6. 6 days, it can't get a bid. Are you ready where 2 standard deviations is? 26.16.
All right. Okay.
There it is, your DJT report for this morning. I looked at this. They gave me we're doing preparation like 3-4 days ahead. And like 4 or 5 days ago, they give me, it was like Thursday last week, they give me the package on Jason Kelly. I'm like, are you kidding me? Then the Iowa basketball players showed up. In women's basketball, popped 18 million viewers, Paul.
Yep.
Right? Final
Amazing.
Four.
Amazing.
Joining us. When does A-Rod show up? Does A-Rod get up this early?
He's coming here today. He's
Drag
coming here later
A-Rod
on.
in. I want A-Rod and...
we're taping new episodes today,
I want
Tom.
to talk to A-Rod about the great Tim Wakefield.
All right.
Fenway. That was very emotional up at Fenway Park with just the tragic death of Tim Wakefield. I want to talk about what we've seen in basketball, and all of a sudden, Brandy Chastain is a really important interview because we've been waiting 30 years for soccer to do what basketball. Brandy Chastain, I mean, help me here.
Yeah.
What does she say about doing in Iowa?
Yeah, I mean, it's a great point, and all these things are coming together, Tom. And listen, sometimes it's better to be lucky than smart. We kind of timed this to have the Brandy Chastain episode of The Deal out this week because it is on the heels, you're exactly right, of the biggest ratings we've ever seen for women's college basketball, now March Madness, now actually called March Madness on the women's side. For the first time ever, the women's final had higher ratings than the men's final.
Yep.
Something is happening in women's sports, and Brandy Chastain is an incredible example. You remember her from 1999. Her team won the World Cup. And everybody thought, here we go, women's sports, it's on the rise. Yep. We're going to have like a great professional soccer league. Didn't happen. And then, shockingly, didn't happen again. They actually failed twice. Now something new is happening. And Brandy Chastain, once an icon, now an owner of Bay FC, which is the newest team in the NWSL.
Oh, she's okay. So Brandy Chastain, women's soccer player, U.S. World Cup.
Yeah.
They won in 1999.
And subsequently a few times.
Right.
Too, yeah.
Famous image of her ripping her jersey off, seen around the world. You would think, as you mentioned, great things, launching pad for not only her, but for women's soccer. What has she been doing since then?
Well, what's interesting is, she didn't make a lot of money, coming out of that. You would think, oh my God, these are the most famous players in the world. They're going to be rich and famous. Famous, yes. Rich, no.
Right.
She has been coaching. She still coaches youth soccer.
Okay.
Actually, in fact, a friend of mine was literally coaching against her not too recently. He said, a little intimidating to look across the field and see Brandy Chastain coaching the other team. But the thing that happened most recently is that Brandy and 3 of her former teammates linked up with Wall Street, a private equity firm called 6th Street out in San Francisco. And 6th Street, this is very Bloomberg, you guys, became the first private equity firm to be a controlling owner of a U.S. sports team when they bought BFC. So this is like groundbreaking stuff.
I mean, this is really, just so you know, Paul, they wanted me to coach soccer, and the parents,
yes, I'm sure.
Parents said, Tom, slice the oranges. that's as far. Oh, you think that's funny, Lisa?
I know about slicing oranges.
You know about slicing the oranges, particularly with a hangover. Jason, I look at this and I go, okay, so what? What's the catalyst? I mean, Rich Truman and I have gone back and forth on this. I'm just waiting for American soccer to take off.
Yes.
I'm sorry. I'm watching Arsenal Man City.
Totally.
What does Brandy say about the American event of all these kids playing with orange slices nationwide, but it just can't find that trigger?
Yeah. I mean, so there are a couple really interesting elements to that, Tom. One of the things that's happened is that the women's game has actually caught on more than the men's game. And that's in part because the best women players, best female players, play in the United States. As you just alluded to, the best male players, with all apologies to friends who play in the MLS, they don't play in the United States. They play in Europe, they play in South America, they play elsewhere, now increasingly in Saudi Arabia.
Right.
So what is happening is that you need people to see the business case, really. And that's where 6th Street and others come in, because up until this point, especially on the women's side, soccer has been like, oh, that's great. Like, we really should support this. It's almost charitable. There's now a group of people who really think there's money to be made. And just to go back to where you started, the viewers are there. The fans are there. I mean, there was a really fascinating thing that happened yesterday with Eli Manning, who is a part owner of Gotham FC, which is the NWSL team here in New York. And Patrick Mahomes, heard of him too, is a part owner of the KC Current, which is the NWSL team in Kansas City. They're trolling each other on Twitter because their teams are playing this weekend. So that's the sort of attention you need from the highest levels of athletes, of culture, of entertainment to really get people excited about that.
What's A-Rod think?
A-Rod is very into this because he's a growth investor in his current iteration, and so he sees a lot of opportunity to invest heavily in this space.
So the NWSL, is that National Women's Soccer League?
Yes, exactly
Now,
right.
do they have a broadcasting deal?
They do, and it's a great question. They just signed their biggest ever deal. They're actually getting paid real money. You're going to see lots of games that are on TV, on like real broadcast TV and cable TV, as well as streamers this upcoming season. More soccer than you've ever seen. So when you think about the prominence of some of the teams that have come on, like Angel City has gotten a lot of attention out in LA. Natalie Portman was one of the founding owners there. Alexis Ohanian, the founder of Reddit, was the lead investor there for creating Angel City. So they're getting the fans in, they're getting people to watch, and a lot of eyes really are on Brandy's team now, BFC, because it's such a huge soccer market.
So you're talking about that. So does that mean the women players are going to be getting paid more?
Yes.
Are we getting there yet?
Yes.
She said with a certain terseness.
I mean,
Are we getting there?
It's a really good question. I mean, and that's one of the big existential questions around women's sports right now, especially when you look at, so let's go back to Caitlin Clark. Caitlin Clark is actually going to make more money this year through NIL deals than she may make next year as a WNBA player. And so the economics still have to be worked out. It's a huge point. We talk about that in this episode with Brandy, because she's been on the other side of that and not getting paid.
I got to digress here from this really interesting and timely show here. All of a sudden, I've watched more Kansas City Royals baseball in the last 10 days than I have in the last 10 years. If A-Rod was Bobby Witt played in Kansas City, would he have been A-Rod?
No.
It's that, to me, it's like Mookie's in L.A.
Right.
Even Boston's not L.A.
Agreed. Michael Strahan told us that.
What have you learned across 12 episodes?
Yeah.
Are they all in the can, or are you still taping them?
Still taping a couple. Stephen A. Smith is actually coming in today
Very
to tape
cool.
an episode. So stay
Do you
tuned for
get
that
the
one.
well-behaved Stephen A. Smith or something different?
I'll let you know. I'm hoping for somewhere in between. Because that's good
very
television.
quickly here, A-Rod couldn't be A-Rod if he was Bobby Witt in Kansas City.
No, absolutely not. Steve Young has said the same thing to me about playing in Silicon Valley at the boom time of Silicon Valley.
All right, so let me just, the deal with Alex Rodriguez and Jason Kelly airs on the Bloomberg Original Stream, 9 p.m. Eastern every Thursday, and on Bloomberg Television, 7 p.m. Eastern every Friday.
Most important question, how many times have you seen Caddyshack?
Oh, 25?
25. There we go. We have a winner, Jason Kelly. That's okay. A-Rod's seen it 30 times.
I call it work.
We finish with Masters music. Good morning. Look for our radio coverage of the Masters.